Good morning, everyone. On behalf of the ISO, we'd like to welcome you to today's EDAM Congestion Revenue Allocation Phase 2 Stakeholder Working Group. My name is Christina Guimera, representing ISO Stakeholder Affairs. I'm joined in the room by Milos Bosinak, George Angelides, and Hilary Staver, as well as John Anders and Guillermo Bautista Alderete online. Just a few friendly reminders here before we get started. Today's call is being recorded for informational and convenience purposes only. Any related transcription should not be reprinted without the ISO's permission. This meeting is intended to stimulate open dialogue and engage different perspectives. Please keep your comments professional and respectful today. Also, please try to keep your comments and questions succinct so that we're able to hear from everyone. And you can access closed captioning on the bottom left of your screen, and the Inteller Transparency Viewer will appear shortly on the bottom right hand of your screen. Just be sure to refresh prior to viewing the Transparency Viewer. We welcome and look forward to your engagement and participation today. For raising your hand during the meeting, the raise hand icon is directly at the bottom of your WebEx screen. If you joined audio only, please press *3 on your device. And please remember to state your name and affiliation first before making any comments. And please make sure to pause a few seconds before speaking after you're unmuted. Sometimes there's a short delay with WebEx. And you can also send your comments and questions via chat to all panelists. And if you need any technical assistance today during the meeting, please send a chat to the event producer and Inteller Events. Today, Milos will get us started with the scope and meeting objectives. Then we'll hear from Dan Williams at the Energy Authority for his stakeholder presentation. And then CAISO staff will discuss potential conceptual design. And lastly, we'll wrap up with next steps. So with that, I will turn things over to Milos Bosinak to get us started.
Thank you, Christina, and good morning, everybody. Thank you for taking the time on another Friday morning to participate in a working group meeting. We'll look to end here by noon and give you a little bit of your Friday back, but I expect it will be a packed discussion. I encourage everybody to raise any questions and speak up as we go through the presentation. We will start, as Christina noted. I'll do a little bit of an introduction, some level setting. We may have some new folks that are joining the initiative at this stage as we're starting to move into evaluating design concepts. And then Dan Williams from TA was very kind to present some of his thoughts on potential designs and perspectives on congestion revenue allocation. So we're grateful to him for taking the time to present today. And then we'll dedicate also the bulk of the time to some of additional concepts that the ISO wanted to introduce for consideration at this initial stage. And by all means, there will be a number of additional workshops that continue to delve into design. But today is that first initial workshop where we introduce some of these concepts for consideration. I'll start with just a little bit on just the initiative scope, just reminding us again that this phase 2 of the initiative is a follow-on to the work that we did last year, was phase 1 of the initiative, where we developed a transitional design for congestion revenue allocation that will be in place for the EDAM go live here in roughly 2 weeks from today, when the EDAM launches. As part of, within that initiative, we committed to working with stakeholders in phase 2 of the initiative on evaluating potential additional enhancements and a long-term, more durable design to congestion revenue allocation, informed in part by operational experience as well that we will start receiving here when the EDAM launches. Some of the key issues that we noted as well in phase 1 of the initiative that we needed to consider and make sure that we address, and these are by no means the only issues, as you'll see a bit later, but we noted that it's key in this phase 2 of the initiative that a design eliminates or significantly reduces any self-scheduling incentives and rather provides support for efficient market outcomes and encourages economic bidding as well that is associated with the granting of congestion revenues. And then another key element is creating further symmetry in the allocation of congestion revenues between the CAISO balancing area and other EDAM balancing areas, recognizing that we have in the CAISO balancing area a congestion revenue right design or CRR design, whereas other EDAM balancing areas operate under an OAT and sell physical transmission rights across their system. And the question is, how can we create a design that creates symmetry between these two concepts of CRRs and both rights that provide a physical right, and how can we provide a financial component to that allocates congestion revenues equitably? If we go to the next slide. Just to provide an overview again of where we've been before this workshop, and in prior working group meetings, we focused on a couple of different things. We focused on data analysis, where we followed through on our commitment that we made in phase 1 of the initiative to evaluate more analytically and try to estimate or scope what are the potential magnitude and effects of the phase 1 design upon EDAM launch. And if you recall, we had sessions over the last couple of working group meetings, where Guillermo presented to us different analyses that he's performed associated with the effects of the phase 1 design between the CAISO balancing area and Pacificor, who is going live here on May 1st. I do want to note that earlier in the week, on this past Tuesday, so a few days ago, we did publish a market notice, and we published a report on the stage 2 analysis that Guillermo performed on the effects of the potential range of effects of the phase 1 design on congestion revenue allocation upon EDAM launch. We also discussed that analysis in the March 6th MNC public meeting, and then we follow that through with a publication of the report that again was published earlier this week. And if you haven't seen that, take a look at the daily briefings. I believe it was published on this past Tuesday. And from an analysis perspective, now the next stage of that analysis is a post-go live analysis. Once EDAM launches in the next 2 weeks on May 1st, Guillermo will continue to then do analysis, but now based on actual operational data of the effects of that phase 1 design upon launch. We also focused in our working groups more directly on the phase 2 design elements. We focused on development of common design principles that would guide ultimately evaluation and consideration of any design options for evolving the congestion revenue allocation design. We started those workshops in December, and then we've had them in February and March, and today is the April meeting, where we now shift, as you'll see on the next slide, we shift towards talking more, rolling up our sleeves and talking about actual design options. But in terms of the principles, I think we have a fairly good starting point for principles. We have received broad support from stakeholders on the principles that are grounded in equity, avoidance of cost shifts, and supporting efficient market outcomes and transparency. And we worked on those over those last several workshops. We do recognize that these are initial principles, that they could be refined as we go through this design stage and evaluate different aspects of alternatives. But I think we have a good grounding to get us started from a principle perspective when we look at the design options and evaluating those principles against the design option. We go to the next slide. So this next stage of the working groups then is really focused on moving away from principles now and into practical design options for congestion revenue allocation, whether again it's enhancements or a completely different design that is long-term and durable. We've, as you'll see today, we have TEA who's going to provide a presentation. We encourage other stakeholders, to the extent that today's discussion stimulates any additional perspectives or variations to what you may hear. We encourage stakeholders to also introduce concepts. The CAISO is going to introduce 3 different potential ranges of concepts for consideration that can be refined in subsequent workshops. But these next set of workshops provided the ability to introduce those potential conceptual designs, stimulate some dialogue, and help us improve viability of concepts or consider variations to these that may make them more viable, and ultimately trying to shape a viable design options that we can then evaluate further now more formally through publications of issue papers and proposals. We have scheduled 4 stakeholder working group sessions thus far that will focus on this design, rolling up our sleeves and working on design. Today is the first session. Then we have one on May 6th, the 26th, and the 16th. And my hope is that after today's session, the next sessions will delve more granularly and deeper into some of these concepts, into variations of these that stakeholders may introduce, or different designs that stakeholders may introduce, spurred by today's discussion. But subsequent workshops will delve more granularly in trying to address some of the issues that we'll flag with some of these concepts that need to be vetted, and ultimately trying to shape viable design options. After each working group, we will allow room for stakeholder comment to help us guide and shape the next workshop. So there will be, as you'll see at the end of the meeting in the next steps, there will be a comment deadline for today's workshop, where we really want to tease out from stakeholders' perspectives on what they heard. Are there any variations to the design options that folks think we may want to consider, and just overall perspectives of the range of designs that you may hear today on which seem more viable directions going forward for a more durable design for congestion revenue allocation. If we go to the next slide. Okay, so with that context, and before we jump into some of the, I'll pause for questions after this slide, but having set that context, and before jumping into some of the presentations on conceptual design and where could this go, I just wanted to just take a moment to just remind everybody of where the phase 1 design landed and what is the design for EDAM Go Live. I think that will help us, having that grounding will help us then compare and contrast the other conceptual designs that you'll hear about today. But if you recall, last year we worked on that phase 1 design. It was approved by FERC in August, and the phase 1 design we noted is transitional because we set the expectation that we're going to continue working with stakeholders now to further evolve that, informed in part by operational experience as well. And the phase 1 design establishes effectively two components: that congestion revenues resulting from internal transmission constraints within an EDAM balancing area. Those congestion revenues all flow back, are allocated by the market operator to the EDAM balancing area where that constraint is located. That's consistent with the EIM design that's in place today as well. The new piece that phase 1 of the initiative from last year added is that congestion revenues that result from parallel flows associated with the exercise of eligible firm out transmission rights through balanced self-schedules that are submitted, those congestion revenues also are allocated to the EDAM balancing area where the transmission rights are exercised. And that new component then provided the opportunity for the EDAM entity to provide a more complete congestion hedge for transmission customers exercising those eligible firm transmission rights. That's the new component that was added in phase 1. The phase 1 design and the Go Live design also retains the construct of the congestion revenues are allocated from the market operator to the EDAM entity. And then the EDAM entity is the one that then further sub-allocates those congestion revenues to their transmission customers, and consistent with their terms of their open access tariff. So the EDAM entities have to take that a step further of dictating and describing within their oath how they're going to sub-allocate the received congestion revenues from the market operator. And for Go Live and Day 1, both PacifiCorp and Portland General have established those oath terms and conditions. So with that context, the next presentation will be from TEA. But before we cede to TEA and Dan Williams to provide the presentation, I wanted to just take a pause here and see if there are any initial questions before we jump into that presentation.
Taking a look here, I'm not seeing any hands raised at the moment, and I'm not seeing any questions in the chat.
Well, thank you, Christina. And you know, we're just starting, so there'll be plenty of opportunities as we go throughout the day to ask questions. So don't hesitate to bring us back as well if something comes up. But I want to introduce Dan Williams from TEA. Thank you very much, Dan, for your willingness to present and for taking the time today, and really appreciate you being available. So I'll turn it over to you for the presentation, and just let Christina know when you're ready to move to the next slide. Thank you.
Sure. Thanks, Milos. And just flipped on the camera to say hi to folks this morning. I do really appreciate the opportunity to just come and share some thoughts. Nothing I'm going to say today will come as any surprise to those who've had the good fortune to get to read through my comments over the last 2 years that we've been engaging on some of these issues through the tariff process, and even going back further than that, just in the working groups and everything. But I do think it's important, and I really appreciate that the CAISO is opening these opportunities for stakeholders to come in, because it gives us an opportunity to not just try and squeeze all of our thoughts into 30 seconds while we're going back and forth during the meetings, and to expand on a few things. And I think hopefully also for the CAISO, it gives an opportunity to say, for these folks like myself who've been in these meetings for years, if this is what we think of how things work, of how the designs came together, and we're totally off base, then we really are disconnected from each other and need to spend some more time setting the foundations and making sure that our understandings are at the same level, so we can keep moving forward on stuff. So I will throughout this kind of encourage folks to weigh in, and also to show up and provide your own version of this in some of the next meetings. So next slide. And I'm going to flip my camera off just so I can stay focused on content. So just a couple things about TEA here. For those who aren't aware, we're created as a nonprofit by public power entities with the explicit goal of serving public power. So on the next slide, you can kind of see how broad our reach is. We serve clients across the country. We're in pretty much every market. We're trading in 48 states. And because of that, we are dealing with a lot of different market rules. We're dealing with a lot of different market designs all across the country. And that gives us a great opportunity to look broadly at what works, what's a challenge. And our lens for this is always what is helping to foster good competition that helps further affordability and reliability within these markets, ultimately to be serving load. I mean, everything at one point or another goes to serving the demand of all of our clients, whether you're in public power or an investor-owned utility, and that's who we're serving at the end of the day and why we're here. And our view on that is just that competition is good, and that competition needs to be not only between entities and the power markets, but between the markets themselves, to come up with the designs that allow us to do what we do in a fair and equitable way to deliver value to our clients. Huge part of that, of course, is moving the megawatts from generation to load, and what that costs, not just in terms of grid access charges and transmission rates, but how it shows up in the costs that are settled through the market. And that is a massive part of that is the congestion, and why we're here looking at this stuff today. So on the next slide, bit of a disclaimer, of course. These are my own thoughts, not official TEA position or position of our clients. And then a few things just that I've thought of, or that I try to bring to the stakeholder engagement process. I've been doing this for a few years. And specifically for today, I want to be sure that I'm inviting that if you don't agree with me, tell me why, show me evidence, bring some other ideas, and let's challenge each other with our ideas, keep things moving forward, show up and participate. And I think if we continue in that space, we'll make the most out of these working groups and ultimately get to designs that are really workable and serve the interests of our clients in these markets. Whether they're customers, generators, developers, we all have a shared interest in this stuff working well together. So next slide. So what I'm going to do today is kind of go through what I see as some of the important foundations for thinking about congestion revenue allocation, and considering how we got to today with the design that we have, and what are some of the challenges and limitations that have brought us to this point, before getting into thinking about the specific design issues, and then some ideas on where we can go from here. So going forward. And one more. Trying to cover CRR market basics in a single slide is an exercise in futility, but I'm doing it anyway. The things I want to point out here, and there's a link right there at the top to the CAISO website, a page that goes into significantly more detail, has links to all the training and all the history of the CRR market. But the things that I want to point to are the things that maybe draw out the differences between how congestion rights are thought of within the fully organized market versus what we deal with outside of the CAISO BA in the OAT-based EDAM areas. So first, CRRs are a financial instrument. They're not physical. They come out of the physical investments that load serving entities are making in the transmission system. That's the basis of doing an allocation, is to recognize that there's this group of entities who are funding the system, who are the primary funders of the system. And because of that, they deserve to get value out of the system that they've invested in. And importantly for that, when getting a congestion revenue right and holding that that instrument, the entities are making a decision to be a part of the value or the risk that comes with holding that CRR. And they're doing that by having the instrument, by being registered as having the instrument, not by using it in the physical flow sense. So they're not scheduling across that CRR. They're using that CRR to achieve some other ends. That could be hedging, or trying to get the locational value between trading hubs, or just lining up between a import purchase or purchase on system and where their load sits within the broader system, so that they have a way to kind of take a view or take a position on the market of how their generation will settle versus how their load will settle, and to bring some connection between those two. The big key there is that they are transactable instruments. They start with allocation. They move through a very intense process of auctions in the yearly and monthly basis. But you can move in and out of the positions. And as you acquire assets or move into contracts, you can line up the CRR with what you have in the physical market. So next slide. On the OAT transmission side, though, we deal with very different things. And OAT transmission is the foundation for EDAM outside of the CAISO, and it's quite different. The open access transmission tariff, basics kind of go all the way back to FERC orders 888, 889, revisions that came about in the early 2010s. There's just so much history there to dig into. But the things that I want to draw out are that what we deal with in the OAT space is all about open access and efforts that that FERC, that sort of all the regulatory bodies went through to get us to a point where we can have an open grid that allows competition between entities, that doesn't sort of foreclose an ability for a independent generator to compete with a maybe vertically integrated generator of an IOU or even of a public power entity to serve demand at least costs. But within that, a system was developed of opening up that access, and that system is using point-to-point rights, or rights that are specifically between a source and a sink, and differentiating those from network transmission rights. And there's some key aspects here. So one is that the point-to-point rights come in a long-term flavor and a short-term flavor. They come in firm and non-firm, and then a couple sub-flavors beneath those. But the key is that those point-to-point rights contribute to funding transmission providers' transmission revenue requirement, or that TRR. And they're doing that by making reservations that are sort of buying that right at a posted rate, and then doing that over a certain term. that locks in some funding for the transmission entity to help pay for their TSP system, and generally does so that the independent generator or the marketer who's maybe stepping in between that generator and the load serving entity can export from one system to another system to serve load in the other system, or wheel across a transmission service provider system to serve load in another system. And that's important because it's a distinctly different way of using a transmission system than what the network transmission users do. And that's the NT rights. NT is all about serving load. I mean, very, very specifically, it is for serving native load within a transmission service provider system. And there are strict rules for how you're allowed to acquire those rights, demonstrations that you have to make around having a designated network resource on a long-term basis to serve that load, and being sure that you're not using those rights to do other off-system activity. There's a whole history in the 2010s of folks who maybe didn't follow those rules and had some issues. And I think by now, though, it is very well known just sort of how different those two products are. Importantly for EDAM purposes, that there is this very well-defined way that you can acquire NT rights as you have load growth or as you maybe need to supplement with different assets or deal with outages, manage around transmission outages and generation outages. And that all is laid out in the transmission provider's OATs and goes through a whole process of saying, hey, my load is growing. I expect it to grow this much over the next few years. I need additional resources. Can my transmission provider, can you give me the right to be able to move those additional resources that I get to serve my load? And that's a process of designating a resource, the transmission provider studying whether that resource can be delivered to your load, and then awarding you those rights. That process takes time though. And so a lot of what NT users end up doing is having to make non-firm use of their network transmission reservations because they can't go out and ask their transmission provider on a daily basis to run a power flow study of their resource that's going to come in at a different intertide today than it does tomorrow or than it did yesterday, or just even if they have an outage on a unit that's going to last a few weeks, they can't go out and say, oh, I'm buying from this other counterparty, and so I want to get a designated network resource from over here versus where I had it today. And that that whole setup though makes it really challenging to deal with some of the congestion rules that are set up in EDAM. And I'm going to get into that a little deeper in a little bit here. Also going to get into a little bit just how differently NT rights are billed compared to point-to-point rights. As I said, the point-to-point rights are contributing funding to that transmission revenue requirement, but ultimately it's the NT rights that are sort of picking up the rest of the bill there. The portion of the transmission revenue requirement that's left ends up being split out based on the coincident peak usage of the load serving entities within the area. And that's basically saying whether it's on a monthly basis or an annual basis, like what's my maximum use of this transmission system to serve my load? Well, that becomes my share of the transmission revenue requirement that I'm covering. And I pay for that share up to that peak, even though on any given hour, I may be using and definitely will be using significantly less of the transmission system. But you don't get to go out and reserve NT just sort of as you need it in the way that you can with point to point, and you don't get it for that really defined reservation quantity that could be split out for a different month, split out for different season, could be on peak or off peak. And that difference, again, sets up a sort of a difficult difference between how point-to-point users and NT users show up in EDAM. So go to the next slide. So for those that have not been with us from the very beginning here, our work on EDAM does go back quite a ways. And I imagine that at least half the folks on this call would tell this story in a different way. But I will quickly just kind of remember that back in 2018, um, EIM entities got together, recognizing that EIM was providing a lot of value to the region, to their companies, and wanted to look at how doing more centralized unit commitment on a day ahead basis and looking at transmission availability on a day ahead basis could provide additional value to those EIM areas. And they were coming out of some efforts in 2015, 16, if I'm remembering correctly, where the thought had been that we were going to go from EIM to a full regional market. But we scaled back from that, and we scaled back to a EDAM design that, with these initial principles, um, which the link is there for, required that entities would maintain their BAs, maintain their separate TSPs, and would find ways within the market design to still do an optimization, but to sort of stay within certain lanes and stay within certain guardrails for what the market could and couldn't do, what it could have access to, and how it would create value um, and settle that value between parties. So there was this period, though, that happened in between. Some of you may remember we went through a pandemic. We had some very challenging operational times during 2020. And on the tail end of that, we came back into these EDAM working groups with a renewed effort to say, there's a lot of value still that we're leaving on the table just by only being in the real-time space. How do we come back and really figure out the difficult pieces that we have to get to an EDAM design that can get a tariff established and can get this moving forward, get to the point where the EDAM entities that want to be a part of that first effort can start working on their tariffs. And that's the process that got us to where we are today. There were some very intense working group meetings, though, that happened over this like 2021, 22 period, that a lot of effort was put into to come up with the design that we have today. And when that was going on, we were coming out of a pretty challenging operating period. As I said, there was some guardedness coming out of the market results and some of the curtailments and load issues that came out of the 2020 timeframe that I think had a sort of big bearing on how entities that were going into EDAM were looking at maintaining their kind of, to some extent, some of the barriers between their BAs and their TSP areas that kept us in this kind of what I always refer to as sort of a bubbles and straws market, where the bubbles are the individual BAs that are doing their optimizations sort of locally and looking at their constraints and their congestion on a local basis, and then the straws being the transfers that connect all of them, and sort of taking that same idea from EIM, where you have the ETSRs and the individual BAs, and moving that into the day ahead space. And that led to the sort of initial tariff that we had that that CAISO came up with. Moving to the next slide. That CAISO and stakeholders came together to make that tried to keep the congestion that was happening within the local BAs sort of separate from the use of the transfers between the BAs to represent the value of moving the energy between regions when you would get to any sort of limits of connectivity. I mean, the best thing is if there are no limits, if the transfers are big enough that any economic energy can serve load anywhere within the entire EDAM footprint. But of course, at the start of EDAM, there are limitations because we aren't moving everyone from EIM straight into EDAM. There naturally is a limit that we run up against that creates that transfer constraint that creates revenue between the areas that then has to be allocated. But it really started with that thought of congestion mostly is a local BA issue, can be dealt with on a local area and have the congestion revenues allocated locally. And from my memory, that sort of led directly into how Pacificor, as the first EDAM entity developing the first tariff, looked at doing congestion allocation and looked at it as something that, in some ways, to keep it simple, could be done on a measured demand basis and could look at just allocating the congestion on the Pacificor system to the load serving entities within that area who are invested in the NT transmission, and therefore we're sort of due a portion of that congestion. I think all of us, knew that that was a very simplistic way to start things, but it was a way to start things, and it was a way that would have done sort of a rough justice, at least for load serving entities on the Pacificor system. But as we were getting right up to Pacificor's initial filing, and even as their filing went in, it became sort of obvious that other market rules, some of the ones around like long-term firm point-to-point entities that were doing wheel-throughs and exports that held those rights, not being able to carve those out of the system and just continue to use them as they do today, but have to use those within EDAM, some of those rules, along with not having intertie bidding, kind of made the allocation just to measured demand sort of unfair and unworkable for the rest of the users on the system. And over a period of a couple months, pivoted to a different design. And that design is the two-step one that we've been talking through and are going live with in a couple weeks here, where the first allocation goes to the self-scheduled generation to load for NT users, along with anyone who has that long-term firm rights for exports or wheel-throughs, to reverse the congestion that that they're experiencing in recognition of how they're using the system. And then the remainder gets allocated out to the remainder of users, those who didn't self-schedule, those who are using NT resources and NT rights on their BA system. And kind of as we looked at that, as we absorbed as a EDAM community, kind of the consequences of those changes and worked through the tariff process, we had in mind kind of some of the things that had happened recently with the MLK event that had created a lot of congestion in the system, and that there were a lot of differing opinions about how fairly that congestion was allocated out to different entities, that folks kind of realized, or at least started focusing more on the fact that constraints in one region impact dispatch in another, and that congestion in one region significantly impacts prices in another. And while for those of us who have a trading background, sort of kind of went, well, like, how did we not know this earlier? We've had unscheduled flow mitigation where you curtail tags in Colorado to deal with congestion, and Idaho, that like this should have been a little more obvious up front. But nevertheless, it kind of like dawned on us as a group that we needed to come up with a way to deal with that kind of parallel flow issue between the regions. And that the solution that came out of that, of being able to do the congestion reversal and take some of the constraint impact from the CAISO constraints in California and deliver that out to the tier 1 uses of the system in the other areas, was more or less a negotiated solution to keep things moving forward that worked for point-to-point users, but really just kind of put the NT users in a very difficult place, because those NT users then got to a point where they had to say, do I want to chase that tier 1 revenue by self-scheduling? Or do I accept that the point-to-point users are going to get the majority of that reversal and focus on getting economic dispatch benefits without having the congestion protection, to the extent that they're even able to get the congestion protection, going back to what I mentioned about the difficulty of getting firm network rights. And that kind of takes us to where we are today. That's the wrap up that I had of the retrospective. So moving forward then, to think about kind of what we have viewed as the kind of design issues that inherent here in the phase one design that's going live. So I'm going to step through just a couple of those, and it starts with, again, looking at the kind of difference in the next slide between how long-term firm point-to-point rights show up in EDAM, how long-term firm network transmission rights show up in EDAM, and how CAISO CRRs, which are still a part of EDAM because they're the instrument that's giving the congestion protection and congestion value to the load serving entities within California, kind of how they show up in EDAM as well. And so there are key differences here. I'm not going to read everything on the slide, but some of the distinctions I've already made between, CAISO CRRs being a tradable product that has very discrete source sink pairs, where you can take a directional position, south to north, north to south, east to west, between these source sink pairs that lines up with the commercial activity that you need to do. In a lot of ways, that more closely mimics the long-term firm point-to-point options that are available out in the EDAM areas, where you can buy those rights on a annual 5-year, 10-year basis, and then be able to resell them on a shorter term basis, but sell them still on a term that would allow them to qualify for getting a tier 1 congestion allocation and being registered within the market. There's this aspect also of how they fund, which I mentioned, that the point-to-point side sort of, it funds what it funds, and then the network side picks up the rest. And there's true ups every year. There's a whole formula rate process that goes through. It's not as clean and simple as I'm stating it, but conceptually, that's kind of where it is. The point-to-point side has use limitations, but less so than the network transmission side. You can buy point-to-point transmission to deliver generation to load instead of using network transmission. But then effectively, if you're doing that as a load serving entity, you're paying twice for the same product. And in general, there's sort of different things within network transmission that map a little bit better to CAISO CRRs, and that, again, the CRRs are awarded out to the LSEs at first. They're so there's sort of that basis in like recognizing that you have this group of LSEs that are really funding the core of the system, and therefore they get some priority in the amount of congestion that's paid out to them. But there's also differences there in that, unlike network transmission, if you're an LSE that is allocated a CAISO CRR, it's optional for you to continue to stay in that position. You can trade out of it, release it, and you also don't need that CRR to serve your load. You can have generation, you can buy imports without having a CRR. Whereas on the network transmission side, you have to have transmission to serve your load, and you pay for that through your NT rates. So moving to the next slide. So if I look at kind of the relative value of these different rights within EDAM and kind of how they will be deriving value, and at least to me, when I think about this, how they're able to derive value within the market. Again, distinct differences between each of them. For NT over there on the lighter side, you have to self-schedule to get tier 1 congestion revenue allocation to get access to that constraint impact outside of your local area, to the congestion that accrues on that's impacting your dispatch prices. And doing that, self-scheduling, ultimately hurts the benefits for all the LSEs. Not only that it hurts your own LSE, it hurts the other LSEs within your area, because then the market's not getting the economic dispatch benefit of just fully offering in your generation to be the flexible resource that can serve load at least costs. Also, if you get that tier 1 payout, it impacts what's left for you to get your tier 2 payout. So there's kind of again, a choice here that doesn't give you a perfect opportunity between either of the two, um, in the way that you have that choice sort of more directly within the point-to-point side. And again, here you fund as an NT user, you fund to your load peak, but then your congestion revenue allocation only goes to your hourly use, because the whole CRA paradigm is looking at your use, not your holding of the right. So at any given time, an NT entity effectively is paying for the full system and only getting a very small proportional allocation associated with that. And especially if they're not able to use their firm network rights and have to get what you could think of as either shelter redirected firm rights and use those as 6NN or as those non-firm rights, which are not eligible for a tier 1 payout if they even wanted to self-schedule them and use them that way. So CRRs, I put a little closer over towards the point-to-point side, because they're not getting the reciprocal parallel flow allocation that point-to-point users can get from the EDAM areas. And we've had discussion about how that was a kind of phase 1 trade-off that we're dealing with now in the design. But CRR entities within California have definitely brought that to the table, that it is pulling revenue from one area to another without having the opportunity to do the inverse. But CRRs can still release any positions that they say, well, if that pulling of revenue makes that position uneconomic, you can get out of it. Maybe not on a daily basis, but on a monthly or annual basis, can move out of that position. Point to point, though, sort of gets the best of every world here, in that by being able to self-schedule and when they self-schedule, get their congestion reversed, they don't really have an incentive to avoid increasing congestion on the system, looking at that in a very narrow basis. So they can kind of think about lining up transactions as a marketer, as a generator, in the way that really just serves their economic best interest, not necessarily the economic best interest of the overall market. They can move in and out of their position, and they can choose to use their CRN, their contract reference number, when it's economic for them, and choose not to use it when it's not. I think we've discussed some areas where that's maybe a little bit of a market behavior zone that some folks are going to be cautious of, but nevertheless, it is an aspect of the design that exists here at Go Live. And just sort of lastly, they are able to get kind of the maximum reversal before others get access to the payout of congestion. So next slide. There are a couple just other things that to me are part of the whole congestion revenue allocation kind of environment that we're working with, and that's that this is a Pacific Core East system. As you can tell, it's very large, stretches across a very large area, which is both a very good thing, because there's a ton of connectivity between Pacific Core and the entire rest of the Western Interconnect. But also, when you think about it from a load aggregation point perspective, is a bit of a difficult thing as well. We're going live with a single load aggregation point for the entire Pacific Core East area. And that is a more simple way of looking at things, but in some ways is very challenging for the market, because if you have load in different areas, that load is getting charged the same price, regardless of how it impacts constraints on the system. So if you're down in southwest part of Utah, you may, if you had your own ELAP down in that area, or if PACE was split up into a different area, have a different incentive to do some sort of demand side management, or to bring on generation behind the meter to impact your load, that if you had that price would be an incentive, whereas if you don't really have that same incentive. And so you don't get that ability for say, a load in southern Idaho to show up differently in the market than a load in southern Utah, and really get the benefit of more granular congestion management in the way that you do within the CAISO BA, in the way that they have split up into some sub areas, not just NP and SP, but sub areas beyond that. And in the slide deck, there's a link that you can't see on the screen, or at least I can't see on the screen, that goes to a presentation that Callie Wells, who's with WPTF now, but was with the CAISO at that time, did on a load dispersion study within the CAISO that looked at price separation between the different sub areas and how nodal pricing was shaping up, to give insight to, like, hey, we should aggregate these areas because their prices are separating, and if we aggregate them, then they have a way to respond to congestion and pricing on the system. So I'd encourage you to check that out, just because it's always fun to look back at stuff from the past, and then talk to Callie, who I think is on the call today. So the other aspect, though, is that the way that we are set up to do the DGAP, or default generation aggregation point, mapping of interchange out to single BAs, in some ways has that kind of same lack of granularity problem. And I went into this in comments in the intertie schedule modeling initiative that we just submitted, and we're gonna have meetings on that separately. But a very simple example that shows up on the screen here is that you can move from the NB Energy BA into PAC East at two distinct points. There's the Donder point that's up kind of in the middle of directly in the middle of Utah, and then out to the east of it where it hits Nevada. And then there's the Red Butte point that's down in the southwest part of Utah, that hits down kind of more into that that southern part of Nevada as well. And with the way that interties are mapped within EDAM, if you are importing from NB Energy into PACE, the reference is considered as coming from the same point, regardless if you're going in at Gonder or you're going in at Red Butte. And for those of us who kind of are more used to scheduling power around the West with a lot of granularity, that doesn't make a lot of sense to us, because we think, well, Gonder generally associates with energy that's either coming from the northern part of NB Energy or coming from sort of the northwest part of the Western Interconnect, coming down and into PACE across the NB system, where Red Butte more represents generation that's coming out of either Southern California or out of the desert Southwest and coming up into that part of PACE. And so there's a potential here maybe to look at increasing the granularity of that, even within the DGAP model, that could help entities deal with managing some of their congestion exposure. And I think we'll have time to get into talking to that in much more detail in that intertie schedule modeling initiative. The last thing I want to mention here, though, is that within this overall framework, and it's not represented by the map, but just in general, that it's very difficult, again, for LSEs to get an incremental source sink hedge out of the acquiring additional 7FN rights that are eligible for the congestion reversal hedge that's available under the current congestion revenue allocation. Even on a 45-day ahead basis, or that sort of typical, like, far out from an operating day basis that, like, LSEs within California or users within California can get additional hedges and protection on a very specific basis. You just can't do that as an NT user within an EDAM BA at this point. So that brings us to a slide or two forward of, well, kind of what can we do? A lot of these are things that are sort of put together as like a choose your own adventure opportunity here, where the preferred path that I would see would be the sort of the green path across the top, which is not an easy path. It's going to be one that's going to take some significant willingness to change tariffs It's going to take an open mind and a different way of looking at things, but I'll try to walk through it quickly and say why I think it's worth that. The other path, the sort of blue one along the bottom, is a little bit easier, a little bit quicker wins. Still takes a lot of work. Still is going to take having an open mind and some negotiation between folks that are in different camps and different positions. But overall, I think everything on this slide is doable. It's something that could be on the map as things that we could consider as potential solutions that fit within the framework of EDAM and that give us a place that's a little bit better than where we are today to land while we're working on a long-term solution. So within a couple of these boxes, so point-to-point carve-outs, why do I keep coming back to that? Well, there's a good reason for it. I view point-to-point users as entities that are sort of moving through and off an EDAM system. They're going to serve load in another area. And whether that's someone wheeling across Pac East or across Portland General to serve an RA contract in California, or it's someone in Idaho selling to someone in Nevada and just moving across the Pac East system to do that, they're not part of the EDAM solution to serve load at least cost within the EDAM BA that those transmission rights are going across. And if we were to carve those out, and by carve those out, I mean just allow entities to use those rights outside of the market to not be settled for congestion as an import and an export from an EDAM area, but just to schedule across it as they do today bilaterally. Think of it as like how you base schedule across an EIM area. Then we could go and focus just on the congestion impacts on the actual EDAM system. And that I think would allow us to go back to more of a metered demand look at congestion revenue allocation that PacifiCorp had in their tariff initially. And that was initially what was also in the, kind of thought of in the CAISO tariff as like, we have congestion in local areas. It needs to go out to the entities that are serving load in that area that are seeing this price separation between their generation and their load are contributing into this bucket of congestion dollars and therefore deserve to get some back. If we carved out point to point, then we wouldn't have a system that incentivizes self-scheduling and would allow all the LSEs to just say, at least, we may not be getting perfect representation of our congestion exposure, but we are getting now more economic benefits out of the market, and that's going to offset maybe some of the peanut buttering of congestion impacts between different LSEs on the same system. Importantly within that too is the open intertie bidding. I come back to this constantly because I think competition in the energy market is a good thing, and I've never understood why we wouldn't want this. But having price responsive interties would allow entities, even if we didn't have the ability to move 7FN rights around to different interties, to at least say, I only want to import into the area if it's economic to do so in light of the congestion exposure that I'm getting. Whereas today they have to self-schedule, other than some very specific instances, they have to self-schedule in a bilateral purchase and just be exposed to the congestion that creates. And that's not good for the LSE. It's not good for any of the LSEs. It's not good for the market, but it exists. It's something that we could address pretty quickly and easily. Tied into that is the SP tie schedule modeling. I'll skip over that one for now, kind of already covered it and some of the things around the gap tie model. I think that with moving to some more granularity in the D gaps, we can kind of approximate the SP tie side, but I still think SP tie schedule modeling is a much better connection of the bilateral market to EDAM, at least within what we have today. I don't think it's something we have to keep forever. Just think it's a bridge from where we are today to a more organized market future. And then creating those sub-ELAPs, breaking up the larger EDAM BAs into sub areas will allow entities to really engage better with the demand price signal that they're getting out of the market and be able to think, hey, if I go out and contract for a resource that's closer to my load, even if I don't have a congestion revenue right, that's going to perfectly allow me to move things around. At least I'm able to offset my load exposure with generation that is in some way close and correlated to each other. So those are the deep value ones that I see. The quick wins that I think we can do even quicker than that would be to, within just the current CRA framework, would be to say 6NN users are paying for the system exactly the same as 7FN users, because they are 7FN users. They're not getting incremental rights. They just have to use 6NN instead of 7FN because of how tariffs were set up and FERC rules and the ability to move it in and out of having designated network resources. But I personally think if we're going to stay in the same place that we are for any amount of time, we should be giving 6NN users the ability to import at any intertie import point that they want and get the same sort of tier 1 protection that someone who has a designated network resource at that intertie point can get. And we can, kind of get deeper into that, I think, in future meetings. The other aspect is that I think we went a little too far with the optionality around allowing entities to sort of choose when they are making themselves eligible for tier 1 reversal. And I think we always talk about tier 1 reversal as delivering value to the rights holder. Well, if you're moving in the wrong direction, though, it could also be pulling value away from you. And so there's this natural tension set up where it's like, if you're benefiting from getting a congestion reversal, you'll want to have that CRN. If you're not, you don't. And we probably need to be a little bit tighter on the management of that. So last slide then is thinking, what about the long term? Where are we going, like, further out from this? And I think we probably all have a little different conception of what long term even looks like, as far as the, how soon can we get to a long term solution, and why do we need to get there over a certain timeline? I think it's absolutely critical that we get to a sort of much different congestion revenue allocation design. If not by 2027, then certainly by 2028. And that is because the design we're going live with in some ways is limited in impact and consequence by the fact that Portland General, Pac West, and especially Pacific Core East are somewhat remote from CAISO. The COI flows definitely have an impact heavily on CAISO congestion, but as Guillermo's study shows, and the one that was just released, like, the further out that you get, of course, the shift factors are less intense for generation redispatch, and that just naturally sort of keeps the congestion revenue allocation in some ways from being as big of a problem as it would be or will be when Bank, TID, LA, and especially NVE all come in and sort of are right there, right next to CAISO CRR market, and any dispatch that's happening in the NVE system or the bank system is 100% impacting constraints within California, and it's going to get very, very contentious to be able to take money out of California constraints and deliver them still within California to an entity right on the other side of a border that is, in some ways like a fictional BA boundary that's giving them different congestion allocation, even though they're having the same impact on the same system right next to each other. So I think we have to deal with this quickly and get to a point where we have a congestion revenue allocation and overall just a congestion rights framework that is more or less the same across the entire footprint. And that means that you've got rights that are transactable. It means that you've got congestion and constraints being managed to a single reference. I think long term, we need to move back to a single system marginal energy component and not try and stay in the bubbles and straws world of EDAM that we are starting with, and have a program that definitely is pointing us towards being able to deal with transacting across future market seams. Whether that's like Pac East to the RTO expansion, Pac East down into Markets Plus, PNM being able to move across those systems to get to CAISO or to get up into other parts of EDAM. We need something that kind of has a mind towards working there. And that could be something like a entitlements-based CRR type product. It doesn't necessarily say that we have to have an auction and allocation framework that's exactly the same in the EDAM areas as what is there in CAISO. But maybe we need to be thinking sort of more in that direction than just thinking about it as we're just evolving out of what we currently have for EDAM. And giving a shout out to Don Trethway here. I think I saw he's on the call as well. Don put a lot of thought into this. There's some really good comments out there from the early part of the Pacific Core tariff process, some stuff from PGE's tariff process that kind of is thinking that we were doing 2 years ago about how we wanted to be making some of these changes much quicker. But might be good reading for folks to go back and think like, what are some of the alternatives that people are proposing that we should be looking at, and then get Don up to give a presentation for the next one of these. And that's it. So I'm happy to answer any questions or give folks time to think about stuff, and we come back in a future meeting and start to hash through some of these things.
Thank you, Dan, for your presentation. Does anyone have any questions for Dan? Taking a look to see if there's any raised hands. I'll turn it over to Milos then.
Yeah, no, thank you, Dan, for the presentation. I might flag a couple of questions here early on. And if we go just back one slide, go back one. So thank you again, Dan, for putting a number of these, for putting these slides together, and then also putting, I think, all of your perspectives on different initiatives all in some unison here on this particular slide. Maybe I'll share some initial reactions and perspectives on this, at least from the ISO perspective. And just thinking on the quick wins first, that you have framed here of affording import 6NN tier 1. So this is secondary network transmission service. This is when a transmission customer is not able to designate a network resource, whether that is because there's no firm transmission on the duration that they want to deliver it on. And I do think that transmission providers now do allow designations on a short-term basis as well. But they can't get the firm transmission or the quality of the contractual resource, or the quality of the import contract does not meet the O tariff requirement to be a designated resource. So it's not always just that you don't have the transmission provider doesn't have the transmission, but it's the contract quality may not meet the requirements to be a designated network resource, and therefore this is a form of delivery on secondary service, kind of the non-firm network service. I think my initial reaction to that is I think that kind of a move for an enhancement to the phase 1 design, I think in my mind would exacerbate the current issue that we're trying to address, because now anybody that's self-scheduling those rights would also, or self-scheduling that import, will also now be receiving that congestion hedge. And you know, I don't think I've seen other market designs where they afford congestion revenues or congestion rents under an O contract to non-firm rights. But you know, we can certainly take some stakeholder perspectives on that as well. That's my initial reaction. I don't know that it solves the self-schedule incentive. I think it maybe exacerbates that situation a bit more.
I just view it as a fairness issue, that you have these entities who are paying, you know, for sort of the full embedded cost of the system, but because of some legacy rules that exist out there, are not able to get that value returned to them. And yeah, I want to move as quickly as possible away from having a self-scheduling incentive, but if we aren't doing that immediately, I think it's just fundamentally unfair to these customers to be sort of not able to get the same protection that you know, that other entities maybe have the fungibility to do. And yes, you can designate on a shorter term basis, and then once you have a designated resource, you can undesignate it. But there are defined caps to how much you can designate that make it difficult to say deal with a long-term outage or deal with a transmission outage and have that ability to kind of move those rights around. It just, we came in with a different paradigm and been operating under a much different paradigm for a lot of years, where a lot of load serving entities are just used to the system that exists. And I don't think that we adequately studied that before putting the design in place that we have.
No, thank you for that.
And I say that
we
as a company that uses a lot of point to point, that in some ways we'd be giving up some value in having this move this way. Just still view it as a fairness thing.
Yeah, and I think similarly though, non-firm point to point does not receive that kind of a hedge as well. So,
Right.
So we try to keep some commonality, at least in the phase one design, in terms of establishing commonality on the firm right. But I understand the perspective. I just wanted to, before we jump on, I think Jordan also has a question. I just wanted also to share a perspective initially, at least on the deep value part as well, and the point to point carve outs, which I think is a bit of a different question here, and I think it raises the issue of removing transmission rights from the market, from the optimization that I think it could in and of itself impact ultimately congestion and what the market is modeling, what the market is optimizing. And I think it raises other ancillary questions that have been debated in FERC filings of whether those transmission rights can be optimized in other markets. But I think this is one of those areas that I'm not sure carve outs is a solution to ultimately ensure that meter demand gets the congestion revenue that it wants. I think there may be other ways outside of going that extreme of carving out transmission that could exacerbate then the congestion on the system if the market doesn't have visibility into it or is not considering it in the optimization. But that's something, again, we can take some feedback on what the impacts may be of that kind of an approach on congestion revenues and stay focused on the congestion revenue aspect
Right.
of that.
And to be clear, this is something that I saw as like a practical, not optimal way to deal with some significant issues for like a year or 2 years until we can get into the long-term thing. I don't think that carve outs are where we want to be 2+ years from now. I think we should be in a point where entities that are needing to wheel across the system can go buy a CRR equivalent to hedge their difference between those two. It's just a practical recognition that we've got some middle ground to get through.
Okay, yeah. No, all I'm trying to flag is I think there may be some deeper unintended consequences of that type of an approach, even if interim, but it's something we would need to evaluate if that's something where we need to move. Let me just ask one last question before turning it to Jordan if you go to the next slide, just to get some clarity on your long-term solution. When you mention entitlement-based CRR-like product or EDAM BAs, does that in your mind also mean stopping the administration and sale of owed transmission? Or are you noting that CRR-like product as in that owed rights, parties continue to sell owed transmission rights, but those confer you on entitlement? I'm just trying to, because usually when we talk about moving to CRRs, in my mind, that means that necessarily means parties CRR rights like in the case of today where there's no sales of transmission akin to the owed. Are you kind of meaning here to go that far, or owed rights confer you a CRR-like product?
Well, so what I'm thinking is that we need to pull together the user communities, those folks who look out to a stable markets footprint in, say, 2030, 2032, and see what their vision is as a independent power producer, generator, marketer. Like, what do they think their needs are to be able to have their assets be used well and get value out of that and serve load in a future market? And then what do you need for a deliverability hedge for that and how does that connect to maybe what you have today? And so that could be some form of an allocation of a right type product that in some way is connected between like a designated network resource and a load for the NT customers so that they have kind of start off with a mapping of their resources to their load, and that confers them some rights in specific places. It could be some sort of a wheel through or an export type right tied to long-term firm transmission investments. But I more want to start with sort of what's the use need and what's the market need that we see 5 years from now, and then try and work backwards from that into, is there something that we can do without thinking that we have to like blow up CAISO CRR market that can bring some harmony between the two, between the outside CAISO EDAM areas and the inside the footprint.
Got it. Yeah, and I think here, for your last sub bullet there on the second section, the sync with broader seams, are you also conditioning this type of approach to potentially having to establish some post seam framework as a precondition to move into this, or is it just kind of a caution that whatever design you put in the longer term context, you may need to reevaluate at some future point depending on to the extent there are seam arrangements or what those dictate?
Yeah, and what I'm focused on there is more around. I mean, I guess there are two aspects of it. Of course, there's like the congestion management between the markets and kind of the respecting each other's systems and not exacerbating congestion across the two. But there's also just the transactional aspect of it, of like when EDAM is up and rolling and Markets Plus is getting going and RTO expansions there. Yeah, how does an entity like TEA have to deal with transmission rights, CRRs, anything else in order to be able to move power from one market to the other? And just understand that and then keep that in mind as we move forward with another design. And I don't know how this is all going to play out, of course, because another future of this could be that the ROE or ROWE helps us move to a single regional market for the EDAM footprint much faster than any of us thought. And we do just have a common program because it's a single market. I think that's the optimal solution, but I just want to get the conversations going on it and make sure that we're bringing in kind of all the perspectives. But there are other folks out there who've done a lot deeper thinking on this over time, and that's why I'm kind of encouraging them to step up, be part of it.
Thank you, Dan.
Hey, Dan, it's James Lynn. Just a quick question on the last bullet, the entitlements. Are you thinking that those entitlements should align with how we do the CRRs today, annual and monthly, or are you thinking that these entitlements should be awarded in a shorter time frame, such as weekly, hourly, or just trying to get an idea of where you're thinking the entitlements should be awarded to?
Yeah, and I don't even know that that's the right word. It's just the word that's been used. But what I'm thinking of there is like, if you have a load serving entity and they sort of have their long-term investments, their long-term contracts, they know where some amount of their generation is coming from relative to where their load is. And again, we may need to kind of break up some of the load pockets into being more granular to get this to map together. But I think if you start there and then say, you've got this generation location, this load location, I'm paying for network rights, so I should be protected between, for the congestion between those areas. That could start out on like an annual mapping. Given that the NT billing for a lot of areas is on this monthly coincident peak, there's a pretty defensible reason then to also be looking at it on a monthly basis and having some ability to move as you move through the year to maybe have different elections in different areas for different contracts. But yeah, that's kind of the area is going. And then for, longer term point to point, for entities that identify that that's going to continue to be part of what they're investing in and needing in order to fulfill their end of a contract. It's kind of the same thing. It's doing that same mapping. Just with them, it's easier because you know where the source sink pair is that they've reserved.
Thanks, Dan. I was just kind of curious on the granularity. Appreciate that.
Next, we can go to Jordan Miner's question. Could we please unmute Jordan?
Hello, Jordan Miner, CPUC Energy Division. First, Dan, thank you for this presentation. A lot to think about here. I just want to dig in on this last bullet point also. Do you have preliminary thoughts how you want to handle revenue adequacy issues tied to a possible EDAM CRA-like product? When I think about doing an EDAM CRA, the first thing I think about is revenue issues and how that would make it an unpalatable product for outside other entities. So just how are you thinking how we would handle the revenue issues if we went down the path like this?
Yeah, that's a good question, Jordan, and a difficult one. And maybe I'll share something over from the Markets Plus side, that in that market, the initial setup for dealing with congestion, quote rights, is that mapping of NT resources and mapping of the point to point, but only in the called prevailing flow direction that naturally is going to end up with some areas being significantly underfunded and entities knowing that even though they hold a right between their generation and load, they're not going to be fully protected because that market doesn't include an uplift obligation in the same way that CAISO's full CRR market and literally every other ARR, FTR market has. But that was a starting point for it. And so I could say, would we need to kind of look at the system and look at flows as, especially once we know what the footprint's going to look like, which I think we have a pretty clear picture on now, especially with NVE committing. Should we look at how the flows are happening on the system and use that as part of a guide to say, developing a system that's going to generally be funded and create the right incentives? That's kind of where I'd start. I mean, I try not to recreate some of the issues that are there in the current CRR market, but I also can't say that I always agree with Energy Division's take on the underfunding issue.
Yeah, thank you.
And I say that in a very lighthearted way because I very much appreciate all the time and effort that you and Michelle put into this stuff.
Thank you.
Do we have anything in the chat? Any questions?
I'm not seeing any questions in the chat at this time, and I'm not seeing any other raised hands at this moment.
Well, thank you, Dan, very much for your presentation. Really appreciate it. For folks that are on the phone, the presentations are posted on our EDAM initiative page. I'll use this opportunity to say as well, we are working on separating this out as its own, to have its own page, the EDAM congestion revenue allocation. So next week or so, it may be on its own page, but his slides are posted as well if you wanted to take a look for posterity afterwards and go through them as well. And we'll have a recording that you can follow along. But we really appreciate it, Dan, for all the effort and time you put into this. And I know Friday wasn't your first choice for the meeting, but really appreciate you being flexible and joining us today. Thank you for the presentation.
My EDAM or my email address is there. And again, to close on it, these are thoughts, challenge them, bring your own ones, and let's get to a better place.
Thank you, Dan. Great point. Okay. We were thinking of taking a 5-minute break, but since this is a virtual meeting, I think we'll in the room, we'll power through it in the interest of time because we do have a number of slides to get through and a number of concepts that we wanted to introduce today. And for those of you that are following along virtually, by all means, feel free to step away, grab coffee or a restroom break. We'll still be going, but in the interest of time, we just wanted to power through and introduce some of the additional design concepts that we wanted to put on the table. If we go to the next slide, I'll provide a little bit of an overview. Similar to what Dan said is, these next few slides are going to introduce these conceptual designs. They're going to identify issues that would need to be addressed to make these viable or otherwise implementable. And the hope and expectation is that in future workshops, we're going to delve a level deeper. But we wanted to introduce the concepts to give you a sense of those, what they do, the pros and cons, how they address maybe some of the issues that we're trying to resolve, and give you an opportunity to react in comments to these. Identify additional issues that we may not have flagged here that need to be resolved and addressed within them, and then subsequent workshops will delve deeper and they may also spur variations of these for considerations or variations of different components to each one of them, or they may spur variations of different alternatives that stakeholders may come up with and want to introduce to the broader working group meeting. I'll start with just an overview slide of the three concepts that we're going to talk about more in depth in the subsequent slides, and then we'll go through each one of them in more detail. And again, I'll stay at a relatively kind of middle level on each one of these as we go through. There's a lot more room and depth that we can go to, but we wanted to reserve that for future workshops. We wanted to just introduce the concepts so stakeholders can start thinking about them and have a frame of mind of where we could go and potentially consider variations in how to make them more viable. The first design concept that we'll talk about is an enhancement to the phase one design where congestion revenues, including that parallel flow congestion revenue, is allocated for cleared balance schedules. Whether those are arising from self-schedules or economic bids, but it's for clear balance schedules that are associated with eligible firm out transmission rights that have been already registered with the market operator. It also introduces, in order to create symmetry with the ISO balancing area, this enhancement introduces that the ISO balancing area and the CRR holders will also receive parallel flow congestion revenue associated with CRRs that are affected by constraints in the neighboring balancing areas. This is a concept that we are introduced in phase one on the design for further consideration in this stage. And so we wanted to bring it back, but also raise some of the issues or concerns that stakeholders have flagged and the MSC with this type of approach, and really think about the viability. Is it viable? Does it make sense? Is it implementable as an enhancement to the existing design? So that's one concept. This concept is still dependent upon the scheduling because it's looking at cleared balance schedules. So it's dependent upon the scheduling in the market associated with rights that have been registered on different sources of location. The second design concept that we wanted to introduce moves away from scheduling and looks at more entitlements, providing entitlements based upon CRRs and eligible out transmission rights. But the second design concept looks at establishing a historical baseline of entitlements for CRRs and those eligible out rights, an entitlement to congestion revenues across the EDAM footprint that also accounts for parallel flows on each other's systems. And this baseline entitlement would be applied or established as of a commonly applied milestone in the EDAM. So it would be applicable to CRRs and transmission rights, eligible out transmission rights, as of the date, either of the year of EDAM entry or the date of entry, or the date of EDAM agreement execution. But it would be, the baseline is tied to a particular commonly applied milestone that can also be applied as the EDAM footprint grows. And then those transmission rights and CRRs would receive a congestion revenue entitlement. And then anything that is after that baseline may not receive that entitlement to particularly the parallel flow component of congestion revenues. But there's some nuances there that we wanted to talk through. But this concept introduces a baseline that differentiates pre and post a particular date CRRs and out rights, and provides an entitlement to those that are prior to that particular date, and recognizes the historical uses of each other's systems. And then the third concept moves away from a baseline, but on a going forward basis, looks at congestion revenue entitlements that are established for CRRs and eligible out rights without creating a distinction between what date those were acquired, but it looks at CRRs and eligible outrights that are all taken together and then put through a simultaneous feasibility test. And the results of that feasibility test establish the entitlement to congestion revenues that those discrete CRRs and outrights would receive to congestion revenues across the broader EDAM footprint. And we'll talk through more some of the mechanics without going too much into depth yet, but what the time frame is associated with those, that's the simultaneous feasibility test and how it would work, and then what are some of the key issues that we would need to work through to make this a more viable approach. So these are the three that we'll go through, and we'll start with the first one with a little bit more depth. I'll go through the first one, the slides that describe the first one completely, and then we'll pause for questions after I kind of capture the full concept, rather than stopping on each slide. We'll do that for all three of these. Once I describe the concept, we'll pause for questions. So let's go to the next slide. So talking about the first design concept, this is again where congestion revenues that arise from parallel flows are allocated based on cleared balance schedules. The congestion revenues that include those parallel flows will be allocated to the EDAM balancing area then based on the cleared balance schedules associated with the eligible firm out transmission rights that have been registered with the market operator at the appropriate source and sink locations across that EDAM footprint. For the KISO balancing area, the allocation would be based, and we'll touch on this a little more in depth in a subsequent slide, but for the ISO balancing area, to create symmetry and common treatment, the allocation for those congestion revenues, including parallel flow, would be based on the source and sink CRRs that are allocated and auctioned through the process that ultimately have an effect on the transmission constraints across or are affected by the transmission constraints in the EDAM footprint from that financial hedge perspective. Like I mentioned on the prior slide, this concept was introduced originally last year within phase one of the initiative, but we noted that it needed more vetting, more nuances that needed to be addressed to address its feasibility and complexity, and we left that for the phase two design. So this is something that we're wanting to just follow through from the phase one design and see, is this viable? Can we address some of the shortcomings to it? Can we address some of the concerns that both the MSC and some of the stakeholders have raised? But what this alternative does, or what this concept does, is that now it provides congestion revenue allocation, including parallel flow or congestion revenue allocation for clear balance schedules, irrespective of whether those schedules arise from a self-schedule of generation or an economic bid of the generation. It's based on clear balance schedules that are associated with those outrights, and then consequently in the KISO, it would be based on the allocated CRRs. We go to the next slide. So want to talk through first here, how would this work in the outrights context? So because this is an enhancement to the phase one design, I think as a starting point for discussion here, I think it would retain the applicable eligibility that it doesn't apply to any and every transmission right, that is, but it applies to the rights that are already been approved and are part of the phase one design, which is long-term firm and monthly firm point-to-point and NITS transmission rights. It doesn't apply to any other transmission rights that don't meet this criteria. The allocation then for those congestion revenues arising for parallel flows is based on the cleared balance schedules associated with these registered long-term firm and monthly firm point-to-point and NITS transmission rights at their appropriate source and sink location. So at one source location, there's 100 megawatts registered because it's from source to sink to a load, for example, of 100 megawatts. We would look at how much of the cleared schedules at those source and sink locations up to the amount of registered outrights, what's the cleared balance schedules at those locations, and that is ultimately what the allocation to those parallel flow congestion revenues would be. And then that again doesn't look at how did you bid that? Did you bid that economically, or did you bid that in a self-schedule way? So we would then collect those congestion revenues as the market operator that may arise at those source and sink locations, and allocate that back to the EDAM entity, and the EDAM entity would sub-allocate to the appropriate transmission customers under the terms of their oath. So if you're a transmission customer, transmission customer that holds these eligible firm rights, you would not have to self-schedule necessarily to get that hedge. You could now economically bid it for the clear balance portion. We would provide those congestion revenues to the EDAM entity to sub-allocate to those appropriate customers under their open access tariff. We go to the next slide. So how would this apply then to the CRRs in the CAISO balancing area? And again, as an enhancement to that phase one design, or at least within the phase one design, we recognize there's an asymmetry because the CAISO, we don't have the same concept of the oath rights that can be reservable on the particular time frames. And there's an asymmetry there that needs to be mitigated. So as an enhancement, this approach would allocate also congestion revenues that may arise from parallel flows to the CRRs that parties may hold at discrete source and sink locations that have an effectiveness factor to constraints within the EDAM footprint. So those CRRs would then also be eligible for an allocation, or more complete allocation of congestion revenues to provide a hedge across the wider EDAM footprint constraints. We would allocate that, just as today the market operator would allocate that to the CRR holders. And what that then also does is it means that, unlike today, this element would also mean that now CRRs could provide a hedge for constraints within the broader EDAM footprint outside of the CAISO, or constraints also outside of the CAISO balancing area. Go to the next slide. So some of the key issues to consider and address regarding the viability of this type of a potential enhancement is, does it meaningfully reduce self-schedule incentives? Both the MSC and the DMM to a certain extent, but particularly the MSC last year in their opinion to the phase one design, spent a lot of time talking about this particular enhancement, raising concerns that, because it's still based on a requirement to schedule, doesn't remove that concept that they say use it or lose it, that it may not meaningfully reduce any self-schedule incentives. It may, in fact, create incentives to bid at or below the economic bid floor, which they also saw as not a prudent incentive that encourages market efficiency. So they raised significant concerns with the ISO and stakeholders considering a concept like this, because they didn't see it as addressing the key issues of the phase one design of the self-schedule incentive may create other, what they saw, perverse incentives to consider. Even though it may mitigate the asymmetry aspect, it doesn't address that first market efficiency concern with self-schedules and then bidding at or below the economic floor. Some of the other key issues that I think we would need to address to improve or consider the viability is, again, is there something that can be done to address those concerns of self-schedule incentives and bidding at the economic bid floor with this alternative? Is there anything that could be done to make it more viable from that perspective to remove those incentives? But I think a key issue that we would have to work through as well is, how would this design apply to what we call EPCs or TORs, existing contracts or ownership rights that have a unique treatment today, at least that holders of those rights, they can avail themselves of the appropriate hedge through a self-schedule associated with those rights, not through an economic bid. And to the extent that we do look at now a more complete allocation based on cleared balance schedules, does that mean that ETC and TOR holders could also potentially, or should they be allowed to also economically bid and also avail themselves of at least some level of a hedge based on the rights that they hold? That's a key question that we would need to address. And then the other key element is that, this alternative would create also expansion of CRRs now, would provide a congestion hedge, or could provide a congestion hedge, not only for KISO constraints, which is the current construct, limited to the KISO constraint, but also now it would be expanded to provide potential hedge across EDAM footprint wide constraints. We go to the next slide. So I'll pause for questions after this slide, but we wanted to just capture some of the pros and cons, kind of the summary of this approach. And again, under this approach, clear balance schedules receive the allocations that are associated with registered eligible oat rights, and then also CRRs that are allocated and through the CRR process and source and SIC location that have effectiveness on EDAM constraints, they would also be eligible for congestion revenues associated with the parallel flow effects. But the pros of this kind of an approach is that it enables allocation of those congestion revenues, because we're looking at clear balance schedules. It's not looking at whether you're economically bidding or self-scheduling. In that way, it allows you to economically bid and potentially still be eligible for an allocation of these congestion revenues and protections from a parallel flow congestion revenue perspective. But it also addresses the asymmetry in allocation with the CRRs within the KISO balancing area, because now CRRs would be eligible for an allocation of the parallel flow congestion revenues associated with constraints in a neighboring EDAM balancing area. So those are the pros. It addresses the CRR asymmetry aspect, and it provides the ability to also potentially economically bid and still find a way to receive that allocation. But from a cons perspective, the MSC and DMM and other stakeholders, I think, have flagged that this may not adequately mitigate those self-schedule incentives. It may not meaningfully reduce it, it certainly doesn't eliminate it, and it could create different incentives to bidding at the economic floor or below to derive those congestion, to get that congestion hedge. Again, an impact to market efficiency. And then as we went back and looked at the viability of implementation of this, I think, and you'll see this is common across all three, but there's a certain level of implementation complexity, particularly with this approach, that it may not make it implementable necessarily on an expedited timeline because of some of the complexity of matching balance schedules to register transmission rights and new functionality that may be needed to accommodate that. But I think implementation complexity is another key element that we wanted to capture here, that it is a challenging aspect to implement in a quick time frame, as we may have hoped for originally when this was introduced in the phase one of the design. Before we move on to the design concept number 2, let's pause here just to see if there are any reactions, questions, clarifications that we can make on this concept. First one.
We do have a hand raised from Callie Wells. Go ahead, Callie.
Hi, it's Callie Wells with WPTF. I just have a quick clarifying question. I think I'm getting lost in maybe some of the terminology here being used. But when you say this creates an incentive to bid at the economic floor or below, I guess I'm confused how, the economic bid floor is the floor. You can't really bid below that other than self-scheduling. I'm sure I'm missing something there. Do you mind explaining that one for me?
No, that's right. That's right. You're correct. The below is also referring to self-scheduling. So you're right. That's the concept. Okay, so the con is there's an incentive to either bid at the floor if you want to bid economically, or you're just going to self-schedule. That's right. I appreciate that clarification. Like I said, I was sure I was missing something there. Yeah. No, thank you for that.
Thank you, Callie. Next in the queue, we have Alva.
Hello, can you hear me?
Yes, we can hear you.
Great, this is Elvis Svoboda from PG&E. I was just curious on this particular proposal, whether it offers a trajectory for converting OAT rights into something more like CRRs for other EDAM entities. It seems like that might address some of the incentive issues if you've sort of set up a path where you can almost piecemeal convert these rights into something that look more like a common CRR. Would you say there's any validity to that, or am I missing something?
Yeah, I mean, this approach doesn't create a trajectory beyond it. I mean, as we go into into the next designs, and none of this precludes us, the stakeholder community, creating some kind of a trajectory that we think appropriate if we've identified, where do we want to ultimately go across that trajectory. But this one stands on its own. It doesn't preclude it, going where you're suggesting. But it doesn't go that far. It just looks at it more in the near term as an enhancement to the design. We could, coming out of this process and evaluating the different design options, we could create a stakeholder community if we wanted to do some kind of a trajectory, depending on the options that we wanted to consider. But that's a fair point that Alva, that you could go beyond that, and as we go through the process, maybe create a staging of, start enhance it here and then move at the next time frame to a different design because you've set the stage for it through this approach particularly.
I mean, I was just thinking about it in terms of like the incentive effects are essentially locked in because the other EDAM entities essentially start with the need to protect those rights. But if there's some way for them to, so the incentive effects are not going to essentially, they're inherent in the idea that these rights are owned, but the EDAM entities outside of California do have some freedom to redefine those or attempt to redefine those rights over time.
Yeah, they do. It is probably might be a big lift to think about it at this stage.
Right. Yeah, I
as
think
entities
you're
are
right
lining
in
up.
terms of thinking.
Yeah,
Not a
no, but it's a great point. I mean, something to keep in mind. I think practically speaking, as folks are thinking about 27 and 28 and designing their roads, I don't know how much room there is for them to think of that staging or a concept of moving away from some of those rights. But that's something that we can continue to discuss as we go, I think, through that range of alternatives or concepts that we'll introduce today and maybe in subsequent workshops, as well as if the stakeholders suggest variations to these. But that's a very good comment, at least to keep in mind, Alva, of the trajectory of these as we go through the evaluation of them, and then willingness to potentially evolve oath rights and what they convey.
Thanks, Milosh.
Yeah.
Thanks, Alva. I'm not seeing any other hands raised at this time, so I think we can continue on to the next one.
Okay, well, let's go on to the next one. This is the second design concept, and this one and the next one move away from the concept of scheduling in order to get a hedge, or tying schedules to hedges, whether it's cleared or you just self-schedule to the amount that you self-schedule is the amount of hedge that you get. These next two concepts move more in the direction of entitlements that both CRRs and oath rights, beyond what physically oath rights may confer you, that they may also confer you a financial entitlement to congestion revenues. But they go about it a little bit differently. This second design concept looks at establishing a historical baseline of those entitlements for both CRRs and eligible oath rights that include also the parallel flow component, but establish a baseline based upon a particular time frame in time or a particular milestone in time, such that those rights that are before that milestone are entered into or held before that milestone date, they receive that entitlement as a recognition of the historical uses of each other's systems, particularly from a parallel flow perspective. We've managed those historical uses in the past up to that point, and they'll get an entitlement to the revenues, to any congestion revenues that may accrue. And then CRRs and outright after that milestone may not potentially be receiving that similar magnitude of entitlement. They would receive an entitlement, but may not be that similar entitlement, particularly to the parallel flow component. So this design concept establishes that historical baseline to those congestion revenue entitlements that account for those parallel flow and historical uses of each other's systems. And like I said, those entitlements are based upon pre and post a milestone date. Those prior to the milestone date receive that fuller entitlement that includes parallel flow. Those after that date may potentially not receive that more complete or potential fuller entitlement that includes parallel flows, parallel flow congestion revenue impacts. One key variability aspect to, or variable to this kind of a baseline approach is there could be some consideration of a simultaneous feasibility test that particularly takes into account CRRs and outrights that may be eligible after that milestone date that are not part of the baseline, that are above and beyond the baseline, to determine is there any feasibility of providing additional parallel flow protection to those, or alternatively, those rights that are above and beyond the baseline that's been established, those would only be eligible for a congestion revenue entitlement associated with internal transmission constraints that are within that source balancing area, but may not be eligible for the parallel flow component. So if we go to the next slide, we'll break this down a little bit more in the subsequent slides. So the design components to this element, because we're establishing a historical baseline, the key question is, what is that historical baseline based upon? And that baseline would provide those entitlements to congestion revenues for CRRs and eligible outrights. One of the suggestions that we think it's cleaner and provides a common metric that would be applied for future entities as additional entities join, rather than making it subjective and it varies from entity to entity, but a common metric and a common application would be establishing a milestone date such that, for example, the baseline is established as of the date that the parties enter the EDAM. So, for example, for Pacificor, be May 1st of 2026, and rights that were in effect prior to that, eligible out rights, for example, NCRR, would be part of that baseline. Anything after that date is not necessarily part of that baseline entitlement. Or it could be the date of the implementation agreement execution. It could potentially reduce some incentives that parties may have to, if that date is the EDAM entry date, there may be enough time there because of the lead up to implementation that parties could potentially, take actions on different systems or make more rights available. That was one of the concerns I think we heard as we were discussing this more internally. But those are a couple of options for the dates or the milestone dates. There could be others that we can think of, but I think establishing something that's commonly applied as the entrants come in is preferred to something more subjective, like looking at historical flows or whatever else. But establishing a commonly applied historical baseline and the milestone time frame is a component that would need to be established or evaluated. Then I think a key element is, well, is this going to apply across all affected transmission constraints? Or as the MSC has suggested in their opinion when they were talking about a negotiated entitlement approach, they suggested, as well as the, governing body expert, they suggested focusing on more impactful transmission constraints. So not just any smaller or less impactful constraints, but really focus on those key constraints that have a larger effect on each other's systems. And so that would require then considering establishing maybe a standard effectiveness thresholds for transmission constraints across which those entitlements would apply. And we would need to establish, as a stakeholder community, we would need to establish that common effectiveness threshold to be able to see which constraints is this going to be applied to, not just to those that have a small effectiveness are less impactful. And then we would need to establish again, how do you account for CRRs and owed rights within that baseline? I think you certainly want to account for legacy transmission right. You certainly want to account for CRRs in the ISO balancing area. And are there any nuances in that, which rights you're considering, but also establishing which rights are eligible and how do you model those? The firm transmission right under the owed. I think a reasonable starting point is, and I think consistent with other practices, looking at firm rights, and then long-term firm and monthly firm, probably not, maybe less practical, the shorter duration firm that you go. But those are some of the key elements we would need to, of the design that we would need to evaluate. If we go to the next slide. And I see, Jordan, you have a question. We'll get to you here in just a couple more slides. So applicability to owed transmission rights. How would this design apply to those owed rights? Well, we would need to establish the eligible owed rights. And again, the suggestion would be, let's start where we are with the phase 1 design. It doesn't apply to just any transmission right that's sold, but rather it applies to long-term firm rights and monthly firm rights that parties have made investments into, both point-to-point and network integration transmission service. The historical baseline entitlement milestone date would need to be established, and then the EDAM entity would need to work with its transmission customers, but also any third-party transmission providers that may be within their balancing area to identify which rights are eligible based on whatever that milestone date or other concept we establish. But if it's a milestone date, then rights that are established prior to that time frame and coordinate and bring that to the market operator. The owed transmission rights that are ultimately within that baseline would be eligible for an allocation of those entitlement congestion revenues and would be eligible for that more complete congestion hedge. And as we'll get to it later, this ultimately depends upon the amount of congestion revenues that you do end up collecting, because as you'll see, I think under both of these designs you hear about, the idea would be you're allocating the congestion revenues that you have collected, which may or may not always be up to the full entitlement, depending on the conditions on the grid. But that's a way of managing the underfunding risk. You just allocate what you get. So they'll have an entitlement, but the payout may be something less than the entitlement, depending upon what the conditions are on the grid and the constraints that do ultimately materialize. And we'll touch on that later. A key component of this, I think, would also need to be is and I didn't highlight it here, I highlighted it on the next option, but there's some nuances that, as Dan was talking about, there's some nuances between point-to-point and NITS transmission rights. There's NITS transmission rights have a certain unique element to it that they're only can be used up to the load. And so there's, how do we model NITS rights and ensure that you're appropriately modeling those within those entitlements within that baseline in particular, accounting for NITS rights and the modeling of those. And then owed transmission rights that are sold above and beyond that baseline, after that baseline date, may not be eligible for necessarily a full entitlement or fuller entitlement to congestion revenues. They may only be eligible for entitlements that are associated with congestion revenues associated that arise from an internal constraint within their balancing area, not necessarily a constraint that arises associated with parallel flows, constrained in a neighboring balancing area. But this is an element that you'll see a couple of slides from now. This is something that's subject for discussion here as well, is, could we look beyond the baseline and run an SFT, a simultaneous feasibility test, to evaluate, is there space, is it feasible still to allow some of those rights above the baseline to potentially collect or receive a broader entitlement that includes the parallel flows to the extent it's feasible on the system without impacting adversely those rights that are within the baseline entitlement. But the idea under this concept is that those owed rights that are under the baseline are eligible for a broader entitlement to congestion revenues than what may occur after the baseline, any rights that may have been acquired after that baseline or above the baseline. if we go to the next slide. So how would this concept apply also to CRRs in the KISO balancing area? And the baseline would also be based on, would provide entitlement to CRRs that are both auctioned and allocated across the source and sink path, along with the megawatt quantity as of that, whatever the milestone date that we ultimately end up identifying. And CRR within that baseline would be eligible for a broader allocation, broader entitlement to congestion revenues that include the parallel flow aspect, looking across the wider EDAM footprint. So those CRRs would get congestion protection for constraints that may be affected within the neighboring EDAM balancing areas. The CRRs and quantities that are above and beyond those entitlements, think of, for example, new transmission upgrades that may yield additional CRRs after that baseline timeframe. Similar to what I said on the prior slide, may or may not be eligible for additional flows, depending on if we want to, perform an SFT to see, can I accommodate more above the baseline without diluting the baseline, but can I accommodate more rights that are feasible, and therefore they're also eligible for additional entitlements that include the parallel flow component? Or are those CRRs similar to OAT rights that are above the baseline that's been established? Are those only eligible for effectively a congestion hedge within the ISO balancing area for constraints that are only within the ISO balancing area, not for constraints that are in the neighboring EDAM balancing area? If we go to the next slide. So some of the key issues to consider and address. And so this is a recap again, but we have to identify that baseline milestone date, or if we want to explore a different metric that allows for a common applicability across EDAM entities as they join the market. We would have to identify the effectiveness thresholds of constraints that we would apply this to, and that they would ultimately receive an associated entitlement to congestion revenues. It's probably impractical under this approach to do it for every single constraint that has maybe a small impact, but rather looking at those that have a more meaningful impact across the footprint. And then we would need to define the eligible OAT rights, and in particularly, how do you account for niche transmission rights, recognizing its unique terms and conditions under the tariff, and how do you provide enough protection associated with the niche rights? We would need to define any applicable nuances associated with CRRs that are considered within the baseline, and then also answer the question, those OAT rights and CRRs that are acquired and arise above the baseline amount that's been set up, are they subject to an SFT, or are we going to look and see, can we go more, and is more flow feasible? And so they could be eligible for the parallel flow congestion component, or are they only associated with the congestion revenues that arise from an internal constraint, not eligible for the parallel flow component to it? And then I think what this design concept also introduces for consideration that we would need to think a little bit more about, but it's, when you're establishing that baseline, and especially if you're looking at a milestone date, baseline entitlement as of a milestone date, how do we account for maybe transmission rights or transmission contracts that may be associated with pending transmission projects at the time? Those rights are not yet live, they're not usable yet, but the projects have been approved, the transmission projects are pending, are in the middle of construction contracts have been established, and transmission contracts conditioned on the completion of the project may have been executed. How do you account for in those nuances, for those transmission arrangements within the baseline establishment? If we go one more slide, and then we'll pause for questions here. But this tries to summarize kind of what are some of the pros and cons of this approach. The pros is that this removes the self-schedule incentive because you're now not looking at schedules. Have you self-scheduled your rights or, with a CRN, or are you looking at a clear balanced schedule? Rather, the entitlement arises out of the mutual establishment of that baseline, and the entitlements are then to the congestion revenues when those constraints bind. But it removes that self-schedule incentive. It does create symmetry with the KISO CRRs and allocations to the CRRs because it includes them within the common baseline with outrights, and they're going to be eligible for that, for allocation of those congestion revenues, even resulting from the parallel flow effects. And then I think more broadly, this approach also allows, as the name implies, it allows for the accounting of parallel flow congestion revenue and the allocation of that through the establishment of that baseline and the baseline entitlements based on those CRRs and outrights. The cons here is, I think, that it does create a distinction between CRRs and outrights that may have been acquired before and after that baseline milestone date. And it could be argued that there may be a potential impact on the value of those, especially on the outrights, when those that are executed and acquired after that baseline date may not receive necessarily the same level of congestion cost protection, similar to CRRs potentially above the baseline amount. And as the EDAM footprint grows and as additional entities join and new transmission projects come in, the baseline may not be reflective necessarily of the flows and uses across those systems, because with every new entity in the market, with every new project, whether transmission or generation, there is an impact on flows. And so how accurate is the baseline, unless you create some kind of a provisions for reopening that baseline and recalibrating it at some frequencies, that baseline may become a little bit stale over time as new entrants come into the market, as new projects come online, and as the flow patterns change. There is some sizable complexity, I think, as well, that we wanted to note here as a con or an impact. The sizable complexity in implementation and administration of this type of a design, because you have to create the baseline, track the baseline rights that are subject to entitlements, those rights before a particular date that were acquired, and then make sure that you're providing the appropriate allocation. And you could just imagine, as more and more entities join the EDAM, you have more tracking and more baselines that you have to establish and consider. Let me pause here, and then we can go to some of the questions on anything that we covered on this design concept, any clarifications, any variations that folks might want to introduce, or things to consider that maybe we didn't capture here.
Thanks, Milosh. We have a few hands raised. First, we'll go to Jordan Miner.
Hi, Jordan Miner, CPUC Energy Division again. Thanks for this. I think your SFT proposal might address some of this issue or question, but do you have any thoughts or proposals how we would go updating the baselines in the future? I'm thinking about, I think it's in PJM and MISO that the baseline has been locked since 2004, and revising these baselines is pretty contentious. So I'm trying to understand if the ISO is thinking about how would we update these baselines in the future before we lock them in.
Yeah, that's a great question. As it's framed now, the baseline would be locked in, but again, through the discussion, if we think that there's a way to create a feature that updates these, I think we can consider it. That's an additional issue we need to think about, is do we want to update this baseline, and what triggers the update of the baseline? Because ultimately, anytime you update that, likely it's going to lead to, with the changing grid conditions, with the new projects, new transmission lines, I would presume that if anything, there's more parallel flow that will be created than not. But that's an element that we can put, Jordan, that if we want to more seriously consider this type of a design concept, how could we, under what conditions and what we need to consider when, in order to update and revisit and recalibrate the baselines on some kind of a frequency. What are the triggers for that? Whether it's time, whether it's some other factor, but that's an issue that we would need to and want to walk through.
Okay, thank you.
Yeah.
Thanks, Jordan. Next in the queue, we have Alan Meck. Go ahead, Alan.
Hi, Alan Meck, PG&E. Milos, I was wondering if you could maybe talk a little bit more about your thinking behind the SFT offering additional compensation for impacts of parallel flow. So like if I have a CRR on path 15, for example, and that's causing parallel flows all over the place, so I would get compensated extra for those parallel flows. Is that to better hedge, is the thinking?
No, good question, Alan. So the concept is the baseline captures the baseline rights that would receive the entitlement, the more complete entitlement that includes the parallel flow congestion revenues. So that if you do have a CRR that there's a effectiveness relationship with constraints in the Pacific area, that CRR could also receive the necessary hedge to provide a more complete hedge to your rights, to that a more impactful financial right, more complete financial right from the source and sink that you've chosen because it's related to a constraint or it has an effect. There's an effectiveness associated with a constraint in Pacific area. If that's within the baseline of the rights that you've established by that milestone date, then yes, you would receive that particular congestion protection. If your rights are outside of the baseline or above the baseline and you get them at a later point in time and are not considered within the baseline, here what we're posing the question, should we run an SFT effectively to look and see, are there additional protections that could be provided to those rights above the baseline entitlements because they're feasible and the uses of that are feasible on the system. If they're not feasible, then there's no additional protection for that parallel flow aspect. Your CRR that's above the baseline would only receive the congestion revenue protection, congestion cost protection associated with internal constraints to the CAISO balancing area, not with a constraint that may be impacting those source and sink locations that's in the PAC BA. So the SFT, we could run it to see, can I accommodate more feasibly, more uses from that source and sink location and provide an additional more hedge than just the internal constraints. And if so, then we can do it. So long as we're not adversely reducing or impacting the entitlements that are for the rights that are within the baseline, that are considered baseline entitlements.
Okay, thanks. That helps me understand the thinking a little bit better. So here's my thought on that. I compare it to the original EDAM design. I was really I'm thinking of the presentation that we had with the market expert a number of months back, and she made a really good point that the original EDAM design is really designed to respect market efficiency, where if you are creating parallel flows on someone else's system, the idea is it's running into constraints on those other BAA's system, and that BAA ought to be able to claw back the cost of that congestion that you are causing on their system, because the idea is that in real time, they are the BAA that is having to redispatch around and bear the cost of those parallel flows. And so I'm wondering, this is just my initial reaction, but it seems like this design idea that you're talking about would actually move in the opposite direction of compensating people for causing redispatch problems on other people's systems. I'm not sure what the effects of that are, but it feels wrong to me.
Yeah, I mean, it recognizes that we use each other's systems and that, you know, consistent, I think, with the phase one design, there's some desire for parties to, you know, not be exposed by moving to the market, to not be exposed now to new congestion costs that may not be otherwise exposable to today prior to the market. So this design looks and says, okay, I'm going to recognize your historical uses, you know, advertent or inadvertent, because they're using it through the rights and there may be some parallel flows as a result of that. But I'm going to recognize those historical uses on both sides, on the CAISO BA, on the EDAM entity BA, and I'm going to make them part of that baseline. I'm going to look to protect not expose you to congestion costs resulting from those parallel flow effects. But anything above that, above the baseline, any new rights that are incremental to what's being protected for in the baseline, you may not be fully protected. You may not fully be able to hedge or more fully be able to hedge for those congestion effects. So it tries to recognize some historical dependency and impacts and uses of each other's system and providing that congestion protection for that. But anything above that baseline, you may not get that full protection, and you could by default end up in that area where you just noted, which is you only get protection for your internal constraints, for congestion that arises from an internal constraint. You may not necessarily be protected from, you know, associated with a constraint in another EDAM balancing area. I'm not going to recognize your parallel flows or provide that parallel flow protection unless we want to, you know, add that SFT component to say, well, let me see, can I do anything? Can I provide any additional protections beyond the baseline? And if not, then it defaults to what you noted. I hope that helps, Alan. A little bit of the concept of this one is tries to provide that more complete historical uses protection, but above the baseline, I may not be able to provide you, or I may not want to provide you that parallel flow congestion cost protection.
Yeah, so it seems like with this design proposal, maybe the trade-off that we're making though is providing everyone a more complete hedge on their congestion, but potentially at the expense of efficient market design principles. Yeah.
Only on the baseline interpret and I think this is important here in the pros, in that the efficiency we think is improved compared to the phase one design, because you're removing that self-schedule incentive with this type of approach. It does create shifting of costs depending upon the different approaches that you're considering, but in terms of efficiency, it creates that incentive to economically bid. So I think it does, compared to other approaches, the impact is more on the cost allocation and what you're willing to provide a protection for. But in terms of market efficiency, I think this addresses the efficiency concerns with the current phase one design that the MSC and the market expert had, because it doesn't tie allocation to self-scheduling. It doesn't look at how you're scheduling things, but more looks at just the entitlement establishment and what financial rights you do in the market. I don't know if you
Yeah.
know that.
So,
Agree.
Alan,
It does. Sorry, go ahead.
James, before you respond, I just wanted to add something real quick. So basically, this is the first step going toward a CRR type of design. You use these baseline to say this is their entitlement rights to that congestion, just like our CRR has entitlement rights to that congestion. But the payout to those entitlement rights are going to be based upon the overall congestion we collect in the market. Where it doesn't go all the way is we're not necessarily running a full SFT across the entire footprint. if we ran a full SFT across the entire footprint, it then would indicate what is the optimal entitlement right to that congestion.
But that's what you'll see here shortly. That's what the next option or the next concept does. This one is a variation on the MSC suggestion of looking at negotiated entitlements as a starting point. Instead of subjective negotiations, it establishes a baseline concept of establishing a milestone date, and then rights before this baseline are eligible for a more complete entitlement to congestion revenues that includes the parallel flow component. Those rights that are above the baseline or acquired after that milestone date may not receive necessarily that same level of protection.
Yeah, and also by giving him the ability to hedge using these entitlement rights, it also increases the incentive to now economically bid in your energy instead of self-scheduling because you have a hedge for your economic bid.
Yeah, and you know the level of entitlement that you need to be eligible for. Hopefully
Okay.
that helped, Alan.
Yeah,
Thank
this
you for
this
the-
helps in thinking through it. Thank you
Yeah.
for the discussion.
Thanks, Alan. Last question in the queue we have is Justin Cockrell. Go ahead, Justin.
Hi, Justin Cockrell with DC Energy. I think some of my questions have been answered in this last discussion. It just seems like this is adding a lot of complexity, and it's almost a mistake that could be avoided. I think if you had everyone exposed to all the congestion that they cause, then you wouldn't have to worry about, oh, okay, is it really fair that you're giving somebody some sort of entitlement that covers their old parallel flows? It's like, all right, well, you're exposed to your congestion. What are you doing right now? And then you have an SFT based model where you have a more dynamic allocation like you have in the CAISO. And you don't have to worry about this. And this seems like, I know we're not starting with a clean slate. I know there's a lot of, obviously people with physical transmission rights right now. But if we are starting at the beginning of creating a new expanded market, this seems like an awkward step that has created a lot of complexity in some of the other markets that could be avoided.
No, and fair point. That's why we wanted to note here in the cons. I think we had, as we were discussing these types of designs, this is intended to be more responsive to some of the feedback we've heard from the MSC and crafting an option that includes a negotiated component. But we agree with you. I think that depending on, once you actually put this into practice and as the footprint grows, and with that each entity, you need to create that baseline that creates a distinction between the entitlements pre and post a particular time frame. I do agree. That's why we try to note that it does create sizable complexity for implementation and continued administration of the design, particularly to make this more viable, if you have to create periods where you recalibrate and reopen that baseline and readjust that baseline, and what are the triggers for that. I think it just builds on that complexity, but that we wanted to create at least a spectrum of options of where we could go, depending upon the comfort level from stakeholders at different stages. And I think, the next approach that we'll talk about, all try to, I think, address some of the issues with this particular approach, but it has its own pros and cons as well. So thank you for that, Justin. And let's see if the next one, maybe the next design concept, maybe addresses some of the concerns, because I think where your questions are going, I think it will, but let's see if all the components capture what you were intending.
Thank you.
Thanks, Justin. Any more questions on design concept number 2?
I'm not seeing any other questions coming in at this time, so I think we can continue on to number 3.
Let's go to number 3. And then, like I did before, I'll walk through the full concept description, and then we'll pause for questions on that pros and cons slide at the end. But this design concept moves away from a baseline, doesn't establish a baseline that creates a distinction pre and post, but rather establishes congestion revenue entitlements for both CRRs and eligible OAT rights, subject and based upon the results of a common simultaneous feasibility test. So all these eligible OAT rights and CRRs would be put through a common simultaneous feasibility test at the same time that looks at what's the feasibility of flow and use of all of these source and sink locations based on the rights that are modeled across that common EDAM footprint. And the results of that SFT then would establish the magnitude of the congestion revenue entitlement from the relevant source to the sink for both CRRs and the eligible OAT rights. I would, this type of an approach where you're now taking in both CRRs and eligible OAT rights into a common SFT, it does also open the door for consideration of a potentially more direct allocation by the market operator of these congestion revenues based on entitlement, not only with the CRR holders as we do today, but also with the transmission customers or their representative scheduling coordinators that have those eligible OAT rights that are part of the SFT and that have an entitlement. But it could also, this doesn't close the door on, we could also continue to, under this approach, continue to work through the EDAM entity and allocate those congestion revenues to the EDAM entity to further sub-allocate under the terms of their oath. But this type of an approach does open the door for more direct, depending upon some of the nuances that we'll talk a little bit about later. If we go to the next slide. So conducting the simultaneous feasibility test, what does that look like? And in subsequent, I think we recognize that the simultaneous feasibility test is something that probably, the participants in the CAISO market, in the CAISO balancing area that avail themselves of CRRs are more familiar with, but we recognize that EDAM entities and their customers and providers may not be familiar with it. So I think there's an opportunity in subsequent workshops that we would delve a little bit deeper into the SFT, what are the assumptions or whatever stakeholders are interested in. But I do want to highlight here at least a little bit of a higher level on the role of the simultaneous feasibility test under this concept. So we envisioned that under this particular design option, we would perform the simultaneous feasibility test on both an annual and a monthly time frame, consistent with how the SFT and the timing of the SFT today is done with the CRRs, because we'll ultimately want to include CRRs and the OAT rights in the same test. The CAISO balancing area would incorporate and nominate its CRRs for inclusion within that simultaneous feasibility test. And I think a starting point is the same process that's done today for incorporating those CRRs into the SFT. And then the EDAM entities would need to work with their transmission customers, as well as the third-party transmission providers that they may have on their system, to identify the eligible rights and OAT rights and be able to nominate them or include them into that simultaneous feasibility test on an annual and on a monthly basis. The results of the simultaneous feasibility test could identify that all of those rights that you've included within the SFT, based on the assumptions that you have in the SFT and your awareness of outages, et cetera. But in its purest form, it could identify that all of those rights, CRRs and OAT rights, are feasible simultaneously. And therefore, all of those rights would receive or be eligible for full entitlement of that's commensurate with the rights that were nominated to those congestion revenues, subject to what may occur. As you'll see later, there may, the market operator may not always collect sufficient revenues to pay those entitlements out, depending on what goes in the day ahead and the real-time timeframes. But the results of the SFT, if it identifies that all those rights are feasible, then the entitlements are, to their full amount. But to the extent that not all of those may be feasible, the SFT will indicate that these discrete rights are not simultaneously feasible with everything else that's in the SFT, and it will identify some lower adjusted amount of feasibility that would dictate the financial entitlement to congestion revenues that those rights would receive, whether it's CRRs, whether it's the eligible OAT rights that have been considering. But the SFT provides that, the results of the SFT provide that indication of the financial congestion revenue entitlement that those rights may be due for that time frame. You know, if we run it annually, it's for the year. For the monthly process, it's for that particular month. I do want to make clear that the SFD, again, will indicate what rights are feasible in order to provide that financial entitlement to congestion revenues. It does in no way impact or abridge the ability of the physical use of the OAT rights in particular. Parties can continue to hold and exercise their physical OAT rights as they do up to their full amount. But to the extent the SFD identifies that not everything is feasible, then the financial entitlement, the financial hedge may be something less than the full physical use of those rights and the physical capability of the use of those rights. If you write for 100 megawatts, the SFD says only 90 is feasible. Once you take everything into it, the hedge will be up to 90. The physical use will remain at its 100 megawatts. We go to the next slide. So how would this design concept number 3 apply to OAT transmission rights? So like I said, the EDAM entity would work with its customers, with its transmission providers, to the extent that there are any third-party transmission providers within the balancing area that sell transmission across their rights under their own oath. They would work with them to identify the eligible transmission rights and include those into the annual and monthly simultaneous feasibility test processes. Obviously, we would need to identify what are those eligible OAT rights. And again, in my mind, the starting point would be long-term and monthly firm point-to-point, and it's consistent with the phase 1 design. But it's important to recognize that the NITS rights, as I've said before, will require some unique consideration to adequately represent those rights and the flexibilities that those rights provide within the SFT to ensure that there's adequate protection for the load serving entities that use and depend upon those NITS transmission rights. For example, NITS transmission rights, its use is limited to their load, the actual load on the system. And so, how do you capture, or maybe consider different scenarios of how do you capture and map the designated resources to those rights or to those loads, and maybe we have some ideas that I think we can delve into in the next stage of workshops, but I think this is an important component to ensure that the load serving entities have the protection that's needed to associate with those NITS rights. The results of that simultaneous feasibility, again, would establish the level of congestion revenue entitlement, or that financial hedge associated with those nominated and modeled OAT transmission rights from source to sink, including NITS that we noted we'll need to work through. And then, as I mentioned earlier, this kind of an approach does open the door for a more direct allocation of congestion revenues to those associated with those discrete transmission rights, OAT transmission rights that have been now included into the SFT process that were nominated for that process. But there's also the ability to continue to work through the EDAM entity and allocate those revenues to the EDAM entity to then ultimately take on the role of sub-allocating that to the appropriate transmission customers. We go to the next slide. So how would this apply then to CRRs in the KITSO balancing area? Well, this is modeled kind of what happens in the KITSO balancing area with CRRs. So those CRRs will continue to be nominated into both the annual and the monthly SFT processes. The SFTs, the simultaneous feasibility test, would, aside from the allocated and auctioned CRRs in the different timeframes, annual and monthly, would also now be that SFT process will now also include the eligible OAT transmission rights that will be part of that test. And then the result of that SFT now, considering the broader EDAM footprint, because you're now looking at not just the CAISO balancing area, but the broader EDAM footprint, that will dictate the magnitude of the congestion hedge associated with those nominated and cleared CRRs across the system. It's important, similar to the previous option, that under this conceptual design, CRRs now would go beyond just conferring a financial hedge within the CAISO balancing area, but they would now, because you're putting everything through a common SFT across the common EDAM footprint, those CRRs now would also be receiving a hedge, depending upon the result of the SFT, for constraints that are across the entire EDAM footprint, not just within the CAISO balancing area. So it captured that parallel flow effect as well, and potentially a more complete hedge that accounts for constraints in the other EDAM balancing areas. We go to the next slide. So some of the key issues to consider, and that I think, to the extent that we wanted to explore this approach more, we would need to delve into in the subsequent workshop. But again, it's defining the eligible old transmission rights for nominations. And I think, like I said, I think the reasonable starting point is to consider long-term firm and monthly firm point to point. I think, and NIT as well, and how do you model NIT? But I think the reason I think that's a reasonable starting point is I think that's more consistent with the hedges that other RTOs and ISOs provide associated with firm rights. But I think also it improves the feasibility because you're not including non-firm rights. If you were to include every old transmission right that the transmission provider may have sold, I think you would certainly, and you combine that with the CRRs and run it through an SFD, I think you would dilute the rights that everybody gets because, or the financial entitlements, because more certainly, if you're considering all the non-firm rights, all the short-term firm stuff, you would be more likely running into infeasibility because of how all of those rights are established in the ATC methodology. But if you limit this to firm, long-term, and monthly firm, I think not only are you improving you're improving the feasibility ultimately that you may run through the SFD and the entitlement that these rights would get if you're not including absolutely every single right that may have been granted. But we would have to define those eligible owed rights. We would have to identify, like I said before, how NIT's transmission rights are modeled and recognizing the flexibilities and making sure that adequate protection is provided for NIT's rights within this process. We need to consider any nuances, again, of how representation of CRRs in the common SFT with the owed rights. I think, once we delve a little bit more into the SFT process in subsequent workshops, I think we'll need to talk more discreetly about, well, what's represented in the annual SFT, and how do you create parity in what's represented in the annual SFT among CRRs and owed rights? Because, in the current SFT, in the annual process for CRRs, you're looking really at 65% of the system. And is there a parallel in the annual process for owed rights? And then the monthly process and the monthly SFT is more encompassing and bringing more in and everything in. But we'll need to consider some of those nuances and also how CRRs are modeled today. Are there any nuances that need to be considered if you're going to now consider CRRs and owed rights in a common SFT? And then whether the market operator, the settlement question I noted, whether the market operator would settle these congestion revenues directly without customers that are part of that nomination process, or work still through the EDAM entity. I think it's important to recognize that under this process, the entitlements arise or are allocated for the rights that are nominated within the process, so that are included, the owed rights that are included and the CRRs that are included. I don't know if I noted this somewhere else, I may have overlooked it in a prior slide, but I think it's important to recognize that congestion revenues could be above and beyond the rights that may be needed to, or the revenues that may be needed to meet the entitlements at times. And I think any of the rights any of the congestion revenues that are above and beyond what may be needed to meet those entitlements that arise from the SFD, I think those would be allocated to the individual EDAM entities for sub-allocation under their individual O's. But what this opens the door for is more direct congestion revenue allocation for those entitlements for those rights that are included within the SFD that have a specific entitlement that comes out of it. But anything above and beyond that would go to the EDAM entities. Any congestion revenues would go to the EDAM entities, sub-allocate under their tariffs. We go to the next slide. Okay, so this is the last slide, and then we can take some questions. There's a subsequent slide that I want to talk about on underfunding risk and how to manage that. But in terms of design concept, pro and con, again, the pro is that this removes that self-scheduled incentive that is present within the phase one design. It creates symmetry with the allocation of the KISO balancing area. That symmetry is not present within the phase one design. It's a key element we wanted to address, but it creates symmetry here in allocation because you are including both CRRs and the eligible OAT rights within the same SFD, and they're receiving entitlement based upon the results of that SFD, which could includes any flows across each other's systems. And it allows for that parallel flow accounting to congestion revenues. Another important piece here that I think maybe Jordan, you were getting at, and it's a key distinction with the prior approach, is that this applies to existing and future CRRs and OAT rights. It doesn't create a distinction between OAT and CRRs that may have been acquired prior to a specific date and distinguish it from those that are acquired after a specific date, but rather anything that you have existing, think of it from the OAT context, any existing sales, and then any future sales as well, they're all part of the same SFD in considering what's feasible, and that drives the entitlement. The cons, none of these designs are necessarily easy to implement. There's complexity associated with implementation and process, and then the administration of it. We'll be able to get a better sense of what that is as we delve deeper and try to address some of the eligibility and other issues that we said we need to address. But complexity of implementation is something to consider, because I think that is, if we go down this path, it's something that drives the timeline of implementation. The more complex it is, probably the more challenging and more time it's needed to implement. But I think another con, or that may be mitigated here, just for us to keep in mind, is new transmission upgrades as the Western grid evolves and new generation comes on and new flows are created, but also new transmission upgrades could create additional opportunities for CRRs as well as eligible OAT rights that would be incrementally considered or added to the common SFD. And that could dilute the congestion revenues over time that parties get. Now, I think some of this is mitigated because new transmission projects presumably also create new capacity, right? That should also have an effect on that feasibility, improve the feasibility such that, it could mitigate some of that dilution. But it's something to keep in mind here, is that as you create new rights, not necessarily stuff that you give on the existing system, but that could shift as you change, shift source and things and create other uses of the existing grid, but new transmission that's created that creates new CRRs and OAT rights, depending on the flow impact and locations of that, could again have an effect on that feasibility and the dilution of potential rights. But again, some of that we would expect is mitigated because you have now additional capability to absorb that, and should also hopefully improve or at least maintain the feasibility that you've seen in the past. So those are some of the pros and cons. I do want to pause here for any questions, and I'd be curious, Jordan and Alan and folks that maybe spoke up on the prior option, does it address or mitigate some of the concerns you may have expressed with the prior approach? And then, one slide after this, I just have some more substantive slide that I want to talk about how you would deal with underfunding, if you can't meet all the entitlements financially because of changes in conditions in the day ahead, real time, or after you run the SFD, how do you would handle that? But just any questions on this concept of design, concept number 3, and I don't know if we still have, Dan Williams as well, because I think this may get closer to where he would want to be on a long-term basis based on my understanding of what he presented. I'd be curious on perspectives from folks, and any questions on this design.
We just received a raised hand from Alan Meck. Go ahead, Alan.
Hi, Alan Meck, PG&E again. So just because you asked for some initial feedback, these are just my first thoughts, and this is very rough. But so I think that this somewhat addresses the concerns that I raised over compensating people for creating parallel flows in other people's systems rather than punishing them for it. Because I think that what I'm seeing in this is that you're effectively the SFT would reduce the amount of entitlements that any particular point-to-point rights holder or CRR holder would be entitled to, based on the amount of parallel flows that they're causing on other people's systems. So I think that that's a step in the right direction. I think that the first limitation I see with this, I think this is probably the best of the 3 proposals I want to say that you've presented, but I think that the limitation might be that this is imposing the harm of parallel flows specifically on the point-to-point rights holder and just increasing or reducing the value of those point-to-point rights or CRRs, and maybe still leaves to be desired the fact that I think the BAA is the one that is not seeing the incentive, the price signal of being punished by causing those parallel flows, which might cause them to want to consider transmission upgrades, for example. And I think that this still dilutes the incentive to build transmission efficiently. But that being said, I think that I still like this proposal best. Those are my rough thoughts.
Thank you. No, thank you, Alan. And there may be opportunity, I think, maybe in subsequent workshops, because of those concerns of, how the transmission providers consider parallel flows in their planning processes or elsewhere. I wouldn't want to leave the impression that, transmission providers probably actively build projects recognizing the parallel flow effect. Because I do think that under both the tariff and I think even under CAISO processes, there's consideration of what the effects may be on other systems. So wouldn't want to leave folks thinking that there's an incentive here to build and cause as much parallel flow in the other system. But there may be room in subsequent workshops to hear from some of those transmission providers, both within their ATC methodologies as well as within their planning processes, just to dispel or at least address this concern, or put it in its right context. How do they consider within their ATC methodologies, but also within their planning processes, the effects on adjoining system? I don't know, there's always a perfect way that they can completely avoid parallel flows just because of the interconnectedness, but what steps do they take to mitigate or minimize those effects? If that is still something that the stakeholders have a concern with, that there's some kind of an incentive here to build system to create parallel flows, and then this is going to come in and provide that congestion protection. There may be room for some of that discussion at a future workshop and contextualize it all for us to see, to what extent is that incentive exist, or are there protections within both the methodology, the ATC methodology, and the planning processes that they go through to understand the effects on neighboring system and mitigate those. But great comments, Alan. Thank you for that. Let's go to Jordan and then Doug, and then I don't know if Jordan is still on from DC Energy, if he would want to jump on. Oh, Justin, yeah, and give his thoughts. But let's go with Jordan, Doug, and then Justin.
Hi, Jordan Mine again, CPUC Energy Division. So on a high level, initially, this seems like the best one to me also, but I need to think about it more. I'd be very curious on external entities' opinions, who are not as familiar with this SFT process. But a more technical question. In the last CRI meeting, we had a very long discussion on the discrepancy between the shift factor threshold in the CRI model and the day-ahead model. Would we see the same discrepancy in the shift factor threshold materialize under this idea?
I didn't pay attention, sorry. Say that again?
Would you mind repeating it? We got George and James are probably in best position to respond to that. Would you mind just repeating it one more time, Jordan?
Yeah, of course. So in the last CR enhancements working group, we had a very long discussion of the discrepancy in the shift factor threshold between the CR model and the day-ahead market model that's causing some issues in that process. Would we see the same discrepancy materialize under this idea?
In theory, yes, because you are going to have changes in the model from when we receive the entitlements and we run the SFT for both the entitlements and CRs together till when we're going into the day ahead market due to outages and other transmission constraints.
And also the footprint changes as DAAs join.
Yes.
Okay.
So that,
thank you for
that
confirming
issue
that.
is still gonna retain.
You make it sound like it's a good way.
Well, just.
Did that address your question, Jordan, or did you have a follow-up to that?
No, I just want to confirm that that discrepancy will still materialize. I need to think about the impact of that more, though. Thank you.
Got it. Thank you, Jim. Okay, Doug, go ahead.
Hi, this is Doug Bocignone for the Bay Area Municipal Transmission Group. I also feel like this third approach is worth spending time on because I mean, all of the approaches have, challenges, but this looks like it can get you to where you ultimately ought to be. And I think it's worth trying to address some of these challenges. And my recollection is several years back when we were talking about some of the EDAM concepts, some of the rights holders with significant rights express a willingness to consider going to a CRR kind of model, recognizing that they're not likely to get 100% hedge. And I think part of why they're willing to do that is they recognize some of the inefficiencies of the OAT approach, and also they recognize that the point-to-point rights aren't themselves perfect. I mean, they don't guarantee a complete hedge. So, I mean, they're subject to curtailments under some circumstances. So the CRR approach, has some advantages that it sounded like, at least at that time, people with rights were willing to consider going in this direction. And I just wanted to comment on the transmission upgrade con. To me, it seems like, I mean, this is I don't know if an issue is the right terminology, but it could apply for all of these concepts. But also, I think the simultaneous feasibility test, will take into consideration changes to the topology of the grid, which helps to address some of these problems inherently.
No, I agree. I did want to note it in here just because, as we were talking through it internally, the question was, are there any incentives for TSPs to, site these projects in areas where it may create more parallel flow? But I completely agree with you that the SFT should catch that, but also, the feasibility should also be reduced based on the additional capacity that's created, but also because of other measures that TSPs take as well to try to mitigate some of the parallel flow effects. I think inherently both within the ATC methodologies, but within the planning processes, that reduces that kind of an incentive. And I agree that the SFT should account for that and appropriately capture that change in flow and effect on any new rights that are created. and I think it's just the reality as well as the flows are going to change inherently, you know, with every new entity that comes on into the market, with changes in resource mix and anything else on the grid, that these things will evolve over time, the level of hedge based upon the grid conditions as well. So appreciate that point, Doug.
Thank you.
Next, we have Justin Cockcroft. Go ahead, Justin.
Yeah, I agree that this third concept is definitely the one sort of most worthy of exploration. I'm just curious. I want to better understand. So you keep talking about the OAT rights from the EDAM BAAs. So it's my understanding, like, okay, they'll continue to be called OAT rights. They won't be CRRs. But you know, I wonder when I think of the physical transmission rights, I think of something that, you know, cannot be. I don't know. I guess how to
Yeah.
articulate this. You know, are they going to be treated equally in the simultaneous feasibility test? You know, are they going to, you know, a physical transmission right from another EDAM BAA, you know, would it be curtailed? You know, if it consumes too much
Yes.
CAISO transmission capacity, it'd be constrained. Okay. You know, and would they have to pay for their, you know, use of the CAISO transmission capacity? I guess they would be subject to congestion caused in the CAISO, right?
Yeah. So let me give it a shot and then see if this helps. But you know, this option doesn't create outright CRRs like we have today in other EDAM balancing areas like we have, because you know, parties continue to administer and sell their own transmission rights, and they have a physical right, you know, that they can exercise through the market. What this would do is take those physical rights and try to, you know, similar to CRRs, which are not physical, but trying to say how much of a financial entitlement do those physical rights give you subject to this SFT. So they'll continue to sell and they have value in the physical context, in that you can exercise those rights through a self-schedule and you'll get the priority in the market. But the level of financial hedge is not dictated by how you're exercising that right in the market. It's dictated by the you know, the results of this SFT. And that's what I was mentioning is they're still called OAT rights because you have that physical ability to exercise that OAT right just like you do today. The DSPs will continue to sell those, but the level of financial protection from congestion that you get is dictated by this SFT that is commonly tested or run with CRRs.
Okay, interesting. Okay, yeah, I didn't fully grasp that before. So for example, like Jordan Miner asked about the shift factor threshold cutoff, which is a cause of underfunding. So they would be subject to underfunding as well.
Correct.
Yeah, and you'll see that on the next slide that we would only pay out ultimately the amount that we collect. We would an entitlement here does not convey an entitlement to revenues that you didn't collect. It's an entitlement to based on the revenues that you do end up collecting through this process.
Okay.
And
Yeah.
this-
So based on what I'm hearing, it sounds like there would be meaningful parity with CRRs. So that's definitely interesting.
Yeah, in this option, basically, we are in CRA1, we're establishing OATs, CRNs, that they're going to self-schedule to do both get the priority and get the hedge. What this is doing is converting it into entitlement rights. So now when you're participating in the market, you can participate just as a self-schedule or economic bid. We won't associate a CRN to it. You're just someone else is just participating in the market.
Okay. Okay, interesting. Yeah, this is definitely interesting. I'll just put in a quick plug that, I do think that you might find a bit some resistance by EDAM entities who see CAISO CRRs as being, really complex, and there's issues with underfunding and all that. And the CRR enhancements working group, I think, has come up with some practical measures that could really help with some of those issues that don't involve a major redesign of your CRR market. I do think that there are ways that you could better model the parallel flows. I do think that there are reforms that could be done to the shift factor threshold cutoff that would really help with the underfunding, and I think make the concept really work better for everyone in the EDAM footprint.
Got it. Thank you, Justin. Thank you.
Yeah.
Thanks, Justin.
Thank you.
And we have one final hand from Steve Keen. Go ahead, Steve. Steve, if you're speaking, you may be double muted. We can't quite hear you yet.
Okay, can you hear me now?
Yes, we can hear you now.
Okay, yeah, Steve Keen from Edison. Listening to this, it seems that one of the benefits of the wider market is that power can move across greater distances. But the structure that kind of exists right now requires people to get, you can't get either a CRR or an outright or whatever from a generator to a particular load if they're in different BAAs. You kind of have to, build up this weird thing. Has there been any thought about the benefits that might come about from being able to, get I'm going to call them CRRs, but some kind of transmission right across the various BAAs within EDAM?
That there has been some internal discussions about that. I think what we need to do is take a little bit of a stepping approach, because that is going to increase the complexity on how you apply congestion revenue and transfer revenue to those holders of those rights. So at this time, we have thought about it, but we think the complexity is too large to do a lead quickly.
However, Steve, with this option 3, you could potentially stream your rights from the generator to a transfer location. Through the transfer, if you have rights, exercising your rights, and then from the other transfer location to the load, having an odd entitlement. So potentially, if you string your rights up, you arrive at the same desired outcome, where as a participant in the market, you can get a hedge for your schedules that are subject to congestion by tallying up all the revenues along the way from these different constructs.
You can. The concern that we'll have to have more discussion on is the fact that transfers are self-scheduled and not economically bid. So then the supporting generation behind it, does it facilitate or want them to self-schedule or economically bid? So I think that's where the additional discussion occurs. Steve.
Yeah, can I ask about that though? You said the transfers are self-scheduled. I thought that the transfers to a large extent, at least within EDAM, were decided economically through the market.
Yeah, you have the option of exercising your rights on the transfer, in which case they're self-scheduled, or releasing the rights releasing the transmission capacity for EDAM to use and collecting the transfer revenue. So you can do it either way.
Right,
Okay.
so then the question then, if you release it and you get the transfer revenue, is it more adequate to include it as part of the CRR/entitlement payout? Or is it still adequate to pay it out as a separate congestion exposure?
Okay. Thank you.
Thank you, Steve. And we do have one more hand. In the interest of time, this will be the last hand for this section to give time towards the end. So go ahead, Alva.
Yes, this is just a clarification. The OAT scheduling rights are simply the right to self-schedule at a certain level of priority, and those self-schedules are seen like any other self-schedules within the market model, correct? So there's essentially in all of these models, an OAT self-schedule is just a self-schedule which might have a higher priority in being curtailed than other self-schedules, but there's no other special attributes to that. Am I correct?
Well, if you want to exercise them, then yes, you will self-schedule to get the scheduling priority. Here with option 3, we provide an alternative which is mirroring CRRs as a hedge instrument. In that case, it's a note entitlement that essentially will pay you the congestion revenue irrespective of how you schedule, and you may decide to bid economically, and you will still receive the allowed entitlement.
Right. The desired outcome is people don't self-schedule, but in all of these cases, they have the right to do that, and it looks exactly the same from step 1 to step 3, right?
Correct.
Yeah.
Yeah, just checking. Thank you.
Thank you. And I'm not seeing any other questions coming in at this time.
If you bear with us just 5 more minutes, I think we're done. But just this is the last substantive slide. We talked about it, I think, as we went through the different slides, but managing that congestion underfunding risk. I think the entitlement to those revenues, particularly as we talked about those entitlements arising from option 2 or option 3, there could be changes in conditions, you know, from the time that you provided that entitlement in the monthly process, for example, when you ran the SFT or whenever you created that entitlement. There could be changes in grid conditions, if there's a different or additional planned outages or constraints that may materialize within that month outside of what you may have modeled or captured within the SFT. And in some of those instances, we may not, as the market operator, collect sufficient congestion revenues to fully pay out those entitlements in those circumstances. And in those cases, as I mentioned earlier, the ISO, as the market operator, would allocate all the congestion revenue that it's collected. And so it would pay out only what it's collected to those folks with entitlements on a proportional basis based on the entitlement that they hold. And this is consistent with how we manage that risk of underfunding within the CAISO balancing area for congestion revenue rights. We only allocate revenues that are collected, and an entitlement that arises out of it doesn't establish a financial right to revenues that have not been collected, but we really just allocate everything that we collect is allocated to those entitlement holders. And this is consistent with those of you that may have participated in CAISO processes, what we affectionately call the CRR 1B initiative policy. But that's the design where we establish this process that you only allocate what you have collected to those holders. And this will apply similarly to CRRs and OAT rights holders. You allocate what you collect. If we go to the next slide, just to finish out on the next steps here, but we got through it, the presentation, we introduced those concepts. Now we encourage you to submit some comments, provide your reactions in writing. Again, informal comments. We're not proposing anything at this stage, so don't feel it. This is an official and overly formal company position, but we really want to get your feedback and initial reactions to the concepts that both Dan and we've introduced here across these design alternatives. And the comments will be due by May 1st. That allows us to take those into account and be prepared for the next workshop, which I believe is on the 6th of May, where we'll plan to delve a little bit deeper and into the next layer of how these concepts would work. And hopefully your comments inform us on, you want us to still keep pursuing, for example, concept 1 or concept 2, concept 3, which one of those you think is most viable to continue to kind of dedicate our efforts and vet them more and consider variations or issues and addressing some of those issues that we've raised. To the extent that this discussion today has spurred any of you to consider a key variation or a new design that you want to introduce, we'd certainly appreciate we can make time for you to present at an upcoming workshop. Just reach out to our stakeholder affairs group, and we're certainly informed by your feedback in these working groups and in the written comments that will help us shape the next discussion that we hope will go a layer deeper. I see Lindsay has a question. Let's go to Lindsay.
Hi, Milos. This is Lindsay Schluckway from NV Energy. I really appreciate all of this information. This has been really helpful, but I assume that once we submit comments, we're selecting one of these 3 options, that we're going to really start to dive in on one of these options. Is that correct? Is that how KITES is going to move forward?
Yeah, and it doesn't have to be one. We can certainly keep as many of them as we need to, but we wanted to introduce the concept, see which one stakeholders are gravitating towards. I'm not expecting all stakeholders to say we love number 1 or number 3. We all just want, if all 3 stakeholders feel that all 3 are continuing to be viable, let's continue breaking them down into more depth or add another one on top of it. We can certainly do that, but the comments will help us figure out or get a sense of where our stakeholders gravitating towards, so that at least we know, are we missing something, or nobody likes what the 3 that we put forward. We got to go and think of something else. But we'll keep bringing these on, and ultimately we'll narrow down once we move to the paper proposal stage. That's where we'll look to narrow things down. But we can bring on as many of these and break them down as stakeholders would like us to in the upcoming workshops.
Okay, that's very helpful. One thing, I guess, since this was a lot of information to digest, would it be possible to potentially extend the comment deadline, or at least could you consider that?
Yeah. Our next workshop is on the 6th. If comments come in, we'll continue to bring as many of these as possible across the upcoming workshop. So, comments come in late, certainly submit those as well. We'll incorporate them into our discussions. But I do want to make clear the comments by May 1st are not going to, change kind of where we're going on the 6th. I think on the 6th we want to delve a layer deeper in hopefully all 3 of these. So don't feel like you're missing out. It just gives us the ability to see, are there key issues that we presented that we're missing that need to be addressed with each one of these options? Are there variations that somebody wants to introduce and discuss in an upcoming meeting? But don't feel like if you missed the May 1st deadline, you somehow locked yourself into something. There's an informal comment to help us continue to shape these options and introduce new ones. And if you submit them after May 1st, we'll take it as well.
Okay, thank you.
Yeah. Okay, with that, we're a little bit over time. Thank you, everybody, for sticking around. Have a great lunch. And if you want to talk about any of these offline, you want to get a better understanding of some of these, we're certainly open. Reach out to me, reach out to your customer service folks. We'll set something up. And if you want to pitch some ideas on variations or issues that we may have overlooked, let us know that as well, and we'll make sure to bring it to upcoming workshops. With that, I'll turn it over to you.
Thanks, Milos. I'll just quickly go through our announcements before we close out today. Here you can see some stakeholder meeting comment deadlines that occurred this week. Here are some details on market simulation meetings and business practice manual updates. And lastly, for insights into the ISO grid market operations, be on the lookout for our Energy Matters blog, where you can always subscribe. So with that, we'd like to thank you so much for joining today's meeting. As a reminder, this meeting was recorded for informational and convenience purposes only. All meeting materials are available on the initiative webpage, and the video recording and comment template will be posted there soon as well. Thank you, and we hope you have a wonderful rest of your day.
All right, that concludes our conference. You may now disconnect.